Okay, we'll bring this Finance and Corporate Services Committee to start. I understand that Scott Davey was here but had to go back home. I presume he's coming back, and Paul isn't here as Vice Chair. And I was delayed because I was caught in an accident back up to all the way to Sports World this morning coming in. So here we are. Consent items. There are 4. Someone prepared to move the consent. Councillor Unesky. Those in favor? Oh, questions? Sorry, there is a list. I'm just waking up here too. Councillor Galloway-Seelock.
Yeah, I have a question with regards to the number 3, the federal gas tax agreement. My understanding that the sports and recreation infrastructure is now eligible for the federal gas tax. Is this a new revenue source that could help implement and speed up the Southwest sports facilities?
Mr. Chapman.
Through Mr. Chair, yes it is.
Okay, so if I understand correctly from the report that the way to implement the new funding would be coming back with the capital budget.
That's correct. As noted under financial implications, our amount does not change for 2014 or 2015, so as a part of the 2015 budget process, we can look at 2016 and beyond.
Is that something that staff would want direction on before capital budget for priorities for the new monies moving forward?
Through the chair, I would suggest with the change or with the upcoming election, it's probably most appropriate to leave those discussions for after the election, but certainly, as mentioned before, it will be a major component of our budget presentations this year.
Okay, thank you.
But I think what Mr. Chapman just said, the first part he said that the amount doesn't change, it's just that the category, and there will be, I guess, a slight increase, will there not, with the indexing?
There is actually a reasonably substantial increase starting in 2016, and so there's no immediate decision to be made, but as a part of the 2015 budget process, we can look at the balance of the forecast.
Councillor Yunetsky?
Yeah, this is the 4th item, the vacant land at Cortland and Benton. It's indicated that the property owner next door wishes to purchase it, which I have no concern about. Are we talking the whole parcel, or are we just talking a part of that parcel?
Through the chair, it's just part of the parcel. It's part.
You're talking 0.04 acres, and that's a small piece, but I wasn't sure how small.
That's correct. It's the part shown on the page 4-2.
Okay. Oh, I'm looking at that where it says number 37. It looks like it's the whole thing because I know there was widenings taken.
Sorry, the lot itself actually went out towards the street and over, and the region has taken a widening.
Right. And so whatever's left over, that's buying the balance of the land?
The balance of the land, correct.
Oh, okay. Now, there's that air conditioning issue that's on. So is that, and I see the agreement is with the city, but if you're going to sell it to the owner next door,
correct. From a legal perspective, it's better for us to clean it up with the neighbor at 145 than leave that to the purchaser.
Okay, so that'll be handled and finalized.
Correct.
Okay, thank you.
Councillor Gazzola?
Yeah, on the gas tax, when did we first receive those funds?
Mr. Chapman, I presume?
If you don't have it, that's something you can provide later.
No, through the chair, it is referenced in the second paragraph of the background. 2005 was the inception of the program.
So did we get the full amount there, or has it been, like we're getting, what is it, 6 million? Did it start out like that, or has it grown to 6 million?
It's grown substantially since that time.
Okay. The list that shows what's eligible, I wondered, is there anything that isn't eligible?
Through the chair, I don't recall a list of exclusions, but we haven't gone through this list to identify what in our capital program would not fit within those definitions.
What is capacity building?
Good question.
I don't have that definition with me.
But that sounds like I could rationalize almost anything.
We can report back through budget on that
okay,
one.
Okay, I shouldn't. Okay, thank you. I also have a question on on the fee for the Joseph Snyder House. Back in 2003, it wasn't granted by this council. What happened then?
What happened then or since
Yeah,
then?
what happened when we didn't approve it? Life seems to have gone on.
Okay, I can't see who's over there. Okay, yeah. There.
What happened when we didn't approve it? They paid the full fee.
And everything was fine?
Yes?
So with this, by us writing off the fee, who benefits from that? Is it the region through their care of the Heritage Home, or is it the vendors, or is it the public?
It would be Joseph Schneider House that benefited.
So the region benefits?
Yes.
Okay, thanks.
Councillor Vanovic?
Thanks. Just one quick question. Mr. Chapman, just on the indexing, is it 2016 that's the first year that we actually receive indexing dollars, but it'll be in the 2015-16 budget that they start? Like, I thought the indexing started right away, but it wasn't going to flow through to us on an annual basis. I seem to have some recollection of that. Do you know?
Sorry, Mr. Chapman.
Through the chair, I can only rely on what's in the report in my own memory. The report does reference that the indexing takes effect in 2016, but I can go back and confirm the exact logistics of that and send an email to council.
Okay, that'd be great. Thanks.
There are no more speakers. Then those in favor of the items? 4 items. Opposed?
No, I'm in favor. Sorry, just
Okay.
a morning slowness.
That is carried. We'll now move to number 5, which is the natural gas purchasing policy. Pauline, are you leading it off?
I'll be starting off the presentation.
Go ahead.
And, okay. Thank you, Mr. Chair. We're pleased to be here this morning to present the results of the natural gas purchase policy review.
Oh, just, Pauline, just excuse me one moment. There weren't any delegations listed, but I see there is Mr. Druitt is here on this item, so perhaps we can listen to the delegation first.
Certainly.
I just realized that now. Mr. Druitt?
Good morning.
Good morning.
Before I go into the natural gas policy review report before you today, I need to mention a few things that took place after my presentation at the April 28th meeting. Due to chamber rules, I was unable to respond to your comments, Councillor Etherington, but fortunately Councillor Gozzola was able to provide a rebuttal in response to indicating that the results of the survey should be ignored. We feel that they are inaccurate due to the faulty foundation that was presented to you KU customers. I would like to refresh your memory of August 13th, 12th, when the results of a survey came before a committee, when both you and Councillor Verbanovic found the results and public input hard to believe. At the time, however, you were unable to give clear rationale as to why you doubted the results. Tricia Wharton and I spent countless hours of research and explained to Council and staff why we found the parameters of the survey marketing materials and input sessions incomplete. Did you choose to ignore our comments, or did you not understand them? I was surprised that the document with the raw data used to calculate the estimated total impact provided by Ms. Houston only came out in subsequent discussion with Wally Malcolm after I left the podium. Unfortunately, I was given incomplete information by staff and therefore spent time calculating an incorrect amount on the impact of KU customers due to the change of the number of KU customers over time, eventually reaching 66,000. I would have appreciated full disclosure of the information at the outset so that I could have been able to calculate properly the true impact on the KU customer over the UG customer. We are all for accurate information. To today's report. Looking back at my first presentation on this issue, May 27, 2013, if Council would have acted on our recommendation, Council and staff would have saved a lot of money and time on this issue. This KU policy should have been reviewed and a report requested by the previous councils, of which a number of you were on, no later than the spring of 2010. I find it surprising that it took a persistent effort of private citizens to care enough and understand the various options available with this issue in order to bring this to Council's attention, instead of the appropriate staff who were delegated to deal with this issue on a daily basis, who would be the group who should have recognized the trends and brought the issue to Council sooner for their review of the policy and procedures involved. To put a different perspective on this issue and relate it to the provincial level, this is a KU equivalent of a 2.9 billion boondoggle. The math follows. Finally, I discussed a few items for clarification with Ms. Houston, and she answered them to my satisfaction. Our Tax Watch group recommends Council pursue option number 2, which provides for more direction to use the higher amount of variable rates when calculating rails and creating a much better balance than has been utilized in the past. And having analyzed the overspending that went along with that past policy decision, we would like to see this adjusted for the future purchasing policy moving forward. And I got all my notes. I'd be glad to answer any questions.
Councillor Fernandez.
Thank you for, thanks for your presentation, Mr. Drewitz. In your first statement, when you were talking about the report, you said that it would make an excellent case study for a post-secondary course. Can you elaborate a little bit more on that?
Yeah, I can talk about my experience in the private industry. We at Bud Canada had some challenges back in the 80s with that recession when Reagan was president, and so we had some challenges, and eventually we overcome them. And one of the department heads' business at the University of Waterloo actually took our situation, read about it in the paper, and came to us and asked for more information, and they would like to make this a case study for their business students. And so that's what happened. So here is a 20-year or almost 15 years, 16 years, 1998 policy that basically went awry, and it wasn't caught on time. Way too late. And whatever the benefits were for the first 11 years, outstripped the other way around. It was to the detriment for 5 years times 5. So, I'd like to... I think it's an interesting theoretical question at this time, and it's just good to get another perspective and input to see what professors and students have to say.
Okay, that's an interesting thought. So I guess coming from that, and I'm looking at page 5-4 in our report, would you suggest that we should have been doing something sooner?
Yes, the policy was approved October 2006, and obviously the economy tanked during late 2008, all 2009, and supposedly a lot of contracts were purchased at that time, so this should have... I like to think that somehow in some report in staff, and it occurred in 2000, in the staff report to Council in 2010, who, by the way, now I find out is the board of KU Utilities, and it should have been highlighted then, and hopefully corrective action would have happened then, not the policy before you today. I understand there's some adjustments that have taken place since 2011, but hey, we didn't have to go through this boondoggle.
Okay, and when I look at your math, when you talk about a boondoggle, maybe you want to just clarify that a little bit. I think what I'm understanding, and maybe you can tell me if I'm wrong, you're saying it's a 58 million overpayment divided by 250,000 Kitchener residents multiplied by 13 million residents of Ontario. This number is even low due to 66 households being KU customers versus the whole population, which are not all KU customers. So, can you clarify that for me?
Yes. There is a section of Kitchener that does not get natural gas from Kitchener Utilities. They get it from Union Gas. So if something like this is not 100% accurate, but this is lowballing it. So 58 million divided by the residents times the citizenry of Ontario is a number that I think is reasonable to throw out, but I suggest it's a lot higher than that, because we don't know how many households do not get Union Gas within the 250,000 population.
Okay, so you and Mr. Donald have both sort of opened up this can of worms, so to speak, and you're now saying, okay, what would you suggest that we do with the policy now? I mean, I heard you said you would like us to pursue option 2. Are you suggesting that we should be reviewing the policy in shorter time frames, not having such a long contracts? Is that what you're suggesting?
Yeah, I actually like the recommendation policy 2, contracts no more than 3 years. I'm also in favor of reducing the rails. We can argue about the percentages reduced, but I'm not here for that today. I think having this review today and coming to a reasonable conclusion for now. There's other points that I would like to bring up on this issue in the future, but I'll leave it at this for now. So for now, we're satisfied that option 2 is a good alternative.
Okay, thank you for your answers.
Councillor Glenn Graham.
Harold, thanks very much for all the work you've done on this. We've just been given 2 pieces of paper, one that says stable portfolio, the other says market responsive portfolio. I know you had a conversation excuse me, with Ms. Houston. Did you get this information?
Nope.
Okay. So I don't know if there's a spare copy.
It's part of the report, I believe.
Where?
Oh, was it? Oh, beg your pardon. Sorry, I didn't know that. I just didn't know if he had.
Oh, sorry. Yes, I did.
Okay.
It's the same as what's on the report.
Okay. Yeah. Sorry. Beg your pardon.
Thing.
Beg your pardon.
I must say these colors are better than what was in the report.
Okay, you're using up your 5 minutes, you guys.
That's fine. And I'm fine with that. In terms of your conversation with your group, you represent a number of people. Could you explain the kind of conversation you had with them and what their response was about their willingness to, and perhaps I shouldn't assume, do the people you're representing also agree with you about this report that you're bringing forward about option 2?
Well, you know something? You see the market price, which is in red. You see the current policy, which unfortunately KU residents experienced. And then if option 1 and option 2 would have been in place earlier than 2009, slightly earlier, or the 2006 policy reviewed a lot better and more questions asked by the then council. It's interesting on both options how much money KU customers would not have had to pay. And I'm actually surprised at how close that blue bar is.
So just let me refocus back on my question. Do you represent in this report the number of your Tax Watch folks and their opinion about option 2 being the preferred option.
This is from Ontario Energy Board. Read that. My answer is yes. And matter of fact, I did a survey on this. I didn't come here blindly.
Okay, no, that's, and so the conversation was they were comfortable with the trade-offs that we've had it explained to us, and that's, they're confident.
No, I surveyed the group. This is not Harold Druitt's. You saw Tricia Wharton's presentation, and you saw how she answered some leading questions from some councillors last time. It's very interesting that I noticed that I did not get any questions by those same councillors, but they were asked to her. It's interesting how that works, Councillor.
Thank you very much.
Councillor Yanetsky.
Thank you very much. It's probably more a question to staff, but you probably read the report. You saw the appendix attached to the report for the modified natural gas options, Appendix A, B, and C.
Yes.
Did you have any comments on the steps that are outlined in those options? And I know option number C is the current one, but on the other ones?
No, not really.
Are you happy with the steps?
You know, I mean, I talked to Ms. Houston on this because it wasn't exactly clear what attachment A and attachment B represented. No, sorry, what these three graphs or two of the graphs represented. And so she clarified it, and when she comes up, she can, if I don't get it 100%, she can correct me. But basically, they took the information that they had back in 2008, 9, 10, et cetera, and applied option 1 to the stable portfolio. In other words, 3 years, and then the present rails. And then they applied option 2, again with a 3-year portfolio, with the rail percentage changed to staff's recommendation right now. So that to me is the essence of the calculation. I got a nod.
Okay, I appreciate that. In going with option 2, and in your report, you outlined a couple of reasons in your last paragraph. Did you want to add anything else as to your comments on option number 2 in terms of the research that you've done and any other deviations that you may think that need to be tightened up, or is it all okay the way the recommendations written?
Councillor Yanetsky, I totally understand that there's in order to get something, to get to the bottom of something, you do need to go into the detail. And I think all of us have gone into a lot of detail during this past year. Our group definitely has a good understanding. I think some of you councillors have a good understanding of what's going on. I'm not sure all of you do. But, you know, my main thrust a year ago was to change the policy, change the time at which you can go out. It shouldn't be 5 years on something like this, and also decrease the rails. And like I say, I could have saved staff and council a lot of time if somebody would have asked me a few more questions on May 27th last year, and somebody made a motion. We could have saved time and money. That's taxpayers' money, not city's money.
Well, I think that it's been a learning experience for all of us. I know for myself as well, that seeing where we are and not knowing all the details in your investigation has certainly helped. So I have no further questions.
Councillor Gazzola?
Yeah, hindsight's 20/20, right?
I'm sorry?
I say hindsight's 20/20. Will you agree with that?
I do, but I tell you, Councillor, when I looked up the policy, when this first started, when this first came to my attention, and I started doing my homework in March 2013 on the cold call from Bob Donald, and I saw the policy that the 2006-2010 Council approved. There was very little oversight in that policy. Very little oversight.
Okay, thanks. I do question your 2.9 billion or whatever it is, but that's for another day. I have just one very simple little question. With the policy that's being recommended, are you now happy?
I'm sorry?
With the policy that's being recommended, would you say that you're now happy?
I am not 100% happy. We are not 100% happy. But for this round, we are content with option 2.
Okay, thanks. Just one final. What is the size of your membership in your organization?
We don't call it membership. We have 200 plus supporters.
Thank you.
Councillor Fernandez.
Thank you. This isn't a question to Mr. Drewitz, but it's in just a quick comment, Council. We have a delegate in front of us, and the whole time that he's been questioned, I've had people moving back and forth here and talking and chatting. I just think it's a little bit rude. It could have waited until he was completed. That's all I'm saying. It just could have waited till he was finished at the podium. Just a little bit of consideration.
Thank you, Councillor Fernandez. Anything else? Okay, there are no more questions, Mr. Drewitz. Thank you for coming in.
Thank you.
Okay, we will now hear from staff.
Thank you, Mr. Chair. I'll start off the presentation, then I'll turn it over to John Voss, who is one of our consultants that helps us with our natural gas purchase policy. You'll see in front of us, in front of you, the results of our review of our natural gas purchase policy. And we recognize that while there is some appetite for both a variable and a fixed rate, stable rate approaches, we continue to see from our recent customer survey that a majority of KU customers prefer a stable rate program. So we do currently, under our currently policy, we do buy a blend of fixed and variable rate market price gas, and to provide some stability for our customers over a 5-year time frame. The last time we were here on April 28th to committee, committee asked staff to look at a purchase policy modifications under a number of scenarios, under a 1-year, 3-year, and 5-year time frame. So that's the report that you see in front of you today. And this is basically a chart of the options that we put together to respond to Council's request. So you can see across the top that there's 3 options in terms of time frame, 1 year, 3 year, 5 year. And in terms of down the left-hand column, we could maintain the current rail approach, reduce the minimum rail only, or reduce both the minimum and maximum rails. And you can see from the chart that the left or the rightmost upper column is our current policy. Now, while that's not the far end of the spectrum, for our purposes, it is the far end of the spectrum based on the direction we were given. So that provides the most stable scenario. In terms of trying to move it closer to a market scenario, there's 2 other options that we put in front of you. So staff is recommending that the policy time frame be reduced to 3 years, and that will achieve a balance that you wish to seek and reflect customer feedback as well. We're putting 2 options in front of you today for consideration under the 3-year time frame. There's a stable scenario and a market responsive scenario. Both these options will provide some market stability for customers and more responsive market, market responsive, which is closer to what some of the customers have asked, and it's more market responsive than our current policy. The two options present a range of possible rate outcomes for customers, and these were modeled in the attachments that you saw in the report. I'm going to turn it over to Mr. Voss to just sort of walk you through the details of how those options would play out.
Good morning.
Good morning.
Mr. Chair, my first slide is just a bit of history to put the discussion of hedging policy into context. So the chart you see is the history of the monthly price for gas in Alberta over the last dozen or so years, from early 2002 to the present. And there's a number of things you can see from this chart that help to characterize how the natural gas market behaves. First, if you look broadly at the trends, you'll see on the left side of the chart from 2002 to about 2006, there's generally a rising trend in the market. Despite the ups and downs from month to month or year to year, the market is trending up over several years. In the middle part of the curve, from 2006 to about 2008, mid-2008, it's generally going sideways, again with significant spikes overlaid on top of that trend, but essentially moving sideways. And then in the time frame since that spike in 2008, more of a general downtrend with, again, some ups and downs overlaid on that longer-term trend. And it's only on the right-hand side of the graph, the most recent years, you see a little bit more of an uptrend again from the lows in 2012 to more recent pricing. Interestingly, the price on the left side of the graph at the start is around $4, and more recent prices in the last few months is around $4. So over that 12-year period, we've essentially gone back to the same place we started from over a 12-year time frame. One of the key observations, though, is that the phases of this market cycle are fairly long. So while we've had a 5-year trend of down prices, we did in a decade or so ago have a 4 or 5-year trend of up-year prices. That time frame is what we've generally seen. So it's easy for us to remember the recent history, but we need to put it in the context of the broader history, that's the kind of cycle we have in the gas market, that longer-term cycle. And so the hedging policy has to accommodate a variety of market conditions that you will see going forward. It's key to note how erratic the prices can be when they're overlaid on top of that longer-term trend. Another key point about the hedging policy is that Kitchener's gas cost is a function of what the market price does as modified by your hedging policy. As a buyer, you cannot go out and negotiate the price to any significant degree. In the very large continental commodity market, you're a price taker. The market price is set by thousands of market participants. You take that price. You can then modify that price by constraining your price within a hedging policy, but you can't meaningfully negotiate a lower price with suppliers. As the chart showed, the volatility, the unpredictability of natural gas prices is one of the defining characteristics of the gas market. Natural gas is one of the most volatile commodities that's traded. And really, dealing with that volatility is an essential part of how people buy gas. Movements in the market price cannot be consistently foreseen. It's not the kind of thing where you time the market or guess what's next or try to look for the bottom. It cannot be done consistently with success. Another key consideration is that price uncertainty that we're faced with is biggest in the near term. In other words, over the next month, the degree to which prices for this winter could change is greater than the price change that could happen in that same time frame for the winter after or the winter after. In other words, price for gas to be delivered in the winter of 14-15 could raise by about 10% by our calculations in the next month, whereas in that same month, price for gas for the next winter is only likely to change about 5 or 6%. So you're faced with that risk in the near term, much more than in the more distant term. So since you're dealing with a lot of uncertainty in the gas market, a hedging policy is really a way of dealing with that uncertainty. It's about risk management. It's about trying to find the right balance, a trade-off between with the goal of reducing the chance of unfavorable outcomes without adding undue cost. So that's the trade-off you're trying to make. And your hedging policy is the tool by which you do that. So Kitchener's policy, as discussed, has been grounded in a rails mechanism, which places a lower limit and an upper limit on the amounts that can be hedged over a certain forward period. Under that policy, the sort of philosophy behind the rails is that since we can never be sure with our market view what's going to happen next, the minimum rail requires that we hedge some gas forward, even if the market view seems like the market is going to be benign, because we're never sure that it will be. We've just been in a benign market for the last couple of years, and yet we experienced a very significant and unexpected price spike this last quarter. So that's an example of sort of lightning out of a clear blue sky that is not uncommon in the gas market. So the lower rail is a hedge, a protection against that. At the same time, the upper rail is a protection against going too far, because you can be wrong that way too. You think prices are going up and they don't. So there's a limit on how much you can indulge that market view. And this is appropriate because your market view can never be omniscient. It can never be perfect foresight. So with the lower rail, with a portion of the portfolio hedged by default automatically because of the lower rail, the portfolio price will tend to lag the market. There's always some that's locked in, so whatever the market does, that piece is not responding to the market. There will always be a lag in the portfolio price. So when the market's rising, the portfolio price will lag. When the market's falling, the portfolio price will lag. It's just a question to what degree, given how high is that rail, how far forward does that rail go. So since your price is a function of the market price with an understanding of the outcome that you aim to achieve, that informs what hedging policy will produce that outcome. It's almost mathematical. Once we know what shape you want, the mechanisms you need to use to produce that shape become defined. And that's really what led us to these charts. So let me first sort of explain some of the parameters that are provided around these charts and then just talk a little bit about them. I think you have color copies in front of you. So let me look first on the boxes on the left-hand side to just explain what some of these parameters are more clearly. So on the stable portfolio example, in the box on the top left, we're talking about first what rails apply to this model. So the minimum rail in this model is 3 years out, 20% would be hedged as a minimum, nothing further out than that. 2 years out, the rail rises to 30%, 1 year out to 40%. That means that the remaining 60% of the gas would be bought through the current year. It would not have been hedged in advance of the current year. It would be priced at the price that prevails in the year that you're receiving the delivery of the gas. The column to the right, the incremental purchase, or as I put it on this slide, incremental hedge, is just the amount you need to buy in that year to move up to the next rail, okay? So 3 years out, you would need to buy 20% to get to that minimum 20% rail. You had nothing purchased before that. The minimum rail is now 20%. You need to buy 20% to get to that 20% rail. When the next year, when the rail moves to 30%, you need an incremental hedge of 10% to move up to the 30% rail. So it's an indication of how much gas is being hedged in that year in order to stay at the minimum rail. So by the time you get to the current year, 40% has been purchased already, the price has been set already, and the other 60% is at the price of the year. So if you look at the chart, you can see that under this scenario, as I said earlier, the portfolio price lags the market price in the rising market and in the falling market. So the red line is the market price. As the market is rising, the blue line is below the market. When the market kind of goes sideways in the middle of the chart there, the blue line follows it pretty closely. When the market falls in the latter part of the chart, the blue line lags it in the decline. However, it's much more responsive to the market, follows the market much more closely than the current policy does, because there's a shorter time frame forward and a lower amount purchased forward. Okay? In the bottom left-hand corner, we tried to sort of characterize the impacts because remember, we're talking about trade-offs between cost and volatility or uncertainty. So the trade-offs, if we can state them in this context, are what's the average price I pay over the period? That's the cost. And what are the risk impacts? We've characterized those in terms of things like year-over-year changes. If consumers in Kitchener are sensitive to uncertainty, it's perhaps the bill impact. How much more will my gas cost me next year versus this year? So what we've tried to show in the table there in the bottom left-hand corner is in this simulation, the portfolio price under the current KU policy would have been $6.79, but under the stable portfolio example, it's $5.57. And the market, just for information, it's not on the chart, but the market average over this period is $5.37. So the stable portfolio is at a premium to the market price. You can see that under the stable portfolio, the maximum year-over-year increase is 23%. So that's an estimate of what the bill impact could be, kind of worst-case scenario within that time frame. How big a bill change the average Kitchener customer could see if the stable portfolio was implemented in this simulation. And the maximum decrease was 18%. And you can see both of those numbers are bigger than the current KU policy would deliver. So because this stable policy is nevertheless more market responsive than the current KU policy, this policy shows a greater price volatility than the current KU policy. Okay, so you have a lower price, but you've got greater uncertainty, greater volatility, greater year-over-year change. And then the values below just sort of turn those percentages into dollar impacts. And those were calculated simply by taking the unit price in 1 year minus the unit price of the year before times the consumption of the average Kitchener customer. That would be the dollar impact, both to the good when there's a decrease and to the bad when there's an increase. Okay, so that's the characteristics of that stable portfolio. And the market responsive portfolio, parameters all the same as I just described, except you can see clearly that in this case, the blue line follows the red line much more closely. And in the parameters, you see that the average cost is $5.50. It's a lower cost than the stable portfolio, but the volatility is greater. The year-over-year changes are of a greater magnitude. So that balance between price and volatility is a different balance.
So just in conclusion, we all know that natural gas is a commodity. Market price moves by factors such as weather, the economy, and other factors as well. So we can't really predict the price to perfectly time our purchases to yield the lowest rates possible. That's not possible to do. And we also know that rate stability is subjective. One person's stable might be another person's variable. So that's important to consider as well. So we have to achieve a balance through our policy review. And we also recognize, and this was a point that was made by the delegation as well, that it's important to periodically review whether our purchase policy adopted by Council meets the objectives and the customer's expectations. So you'll see in its point number 4 in the revised policy for either the variable or the market responsive versus a stable scenario, we've included an opportunity, I shouldn't say an option, it's a required review of the policy at a minimum every 3 years and no more often than 1 year. So that concludes our presentation. Mr. Gruenbauer and Mr. Voss and myself are here to answer any questions that you have.
Thank you. And there are questions, starting with Councillor Glenn Graham.
Thanks very much, Ms. Houston, Mr. Voss, and Mr. Gruenbauer. I'd like to ask about the premium that is being charged for stable. Is it 7 cents? And is that the measurement per cubic meter that I'm looking at if I look at the average price difference?
It's 7 cents per gigajoule.
Gigajoule,
yes.
okay.
But just to clarify, as a premium, it's really just that the average price is higher. So I'm not sure if that's what you meant by premium, but just to be clear.
That's what I'm trying to get my head around, and so it's 7 cents, and so I'm just trying to figure that out in terms of the average bill. So I think there was a discussion last time that would equate about $55 for the average households in Kitchener per year. Is that correct?
I see Mr. Gruenbauer using his calculator there, so we'll go with his number.
Mr. Gruenbauer. It's, through you, Mr. Chair. That 7 cents per gigajoule would translate into about a $5 or $6 annual bill impact for an average residential customer using 2,100 cubic meters a year.
So the difference between the stable policy and the market policy is $5 or $6 a year. Is that correct?
Yes, that's correct. But again, this is an illustration.
Okay. I guess I'm confused based on the previous conversation, but thank you for trying to clarify. The second question pertains to reporting. So if I understood you correctly, it's no less than once a year, or sorry, no more often than once a year, and not longer than once every 3 years. But what triggers that?
It could either be triggered by council requesting a review or by staff bringing forward a recommendation for a review to be done based on the market conditions. You'd also see every year we do rate changes. So, and we also bring forward information at budget time about the rates compared to market. So those would be the kinds of triggers that council would see that you might want to consider a policy review.
And is that a substantial amount of time needed to do that review by staff? Just trying to understand if it could be done every year automatically, or is it something that you need council direction on?
If we do it automatically every year, the concern would be we would want customer input every time we do a policy review. So it would involve surveying our customers, and there would be a cost to that, and so on.
Okay, thank you very much. And at the appropriate time, Mr. Chair, I'd be prepared to move option 2.
Thank you. Councillor Gazzola.
Yeah, I have a number of questions. The first thing I'm trying to ascertain is where we sit right now. Now, last year I spoke with Mr. Malcolm, and he sent me back information that we're committed right up to 2018. Is that right?
I think Mr. Gruenbauer has some information about our current portfolio. I didn't bring that with me.
That's what I was trying to get at yesterday when I was sending a flurry of emails to you.
Yes.
I'm trying to see where we sit right now.
Okay. Through you, Mr. Chair. Councillor Gazzola, in response to your email yesterday, I indicated our current fixed price portfolio is at the minimum rails only of the current policy. So we purchased gas out for the next 5 years with the first gas year starting this November 1st, and it declines lockstep with the minimum rails under the current policy, which are included in the staff report. 40%, 30%, 20%, and then 10% and 10% out into the future.
Okay, I'm totally confused. First, when we talk years, what are you talking as far as years are concerned? Are your years different than a calendar year?
Yes, that's correct. For gas supply, the gas year is November to October. It's out of sync with the calendar year by
so
about
it's
2 months.
November to October.
Yes.
When I was given a figure last time for 2014, and it showed 47% was already committed. Now, 2014, is that November of 2014 to October of 2015, or was that November of 2013 to October of 2014. I'm trying to see where we're at. Can I look at that in a calendar year way? Like if I look at 2014, we normally buy, and now we're getting into gigajoules, but we normally buy 200 million cubic meters. How much of this year's 200 cubic meters is at the fixed rate?
Councillor Gazzola, on a calendar year basis, and these numbers, they're pretty current. They were presented to our Commodity Risk Committee about a month ago. I can give you the fixed percentages by calendar year. 2014 was 49.7%, so essentially half. Calendar year 2015, 38%. Calendar year 2016, 28%. Calendar year 2017, 18%. Calendar 2018, 10%, which is identical to the rail because it's that far out. And 2019, 8%. So over the calendar periods from 2014 to 2019 inclusive, that's 6 years, the gas purchased under fixed price is 26%.
But that's we're committed for 6 years. So are we stopping commitments for 2019 and 2020? We're not doing any more of that at this time, are we?
If council directs us not to do that, that's correct.
Well, my understanding would have been that if we were on a 3-year rail, we would only be purchasing for up to 3 years. We wouldn't be committing beyond that.
But the policy doesn't come into effect until council approves it, so we would still operate under the current policy.
So if council approves what you're recommending, then we'll not be purchasing for going what? We would be purchasing, committing ourselves for what, 2015, 16, and 17?
Yes, there wouldn't be any purchases beyond October 2017, I think. Yeah. That's correct.
Yeah. I just before I move on with some, I have some problems with what we're charging now. From information I was provided, our fixed cost was about 16.168 cents a cubic meter. And I look at the chart that you gave us before, the Waterloo rate was 22 cents a cubic meter, which is rising. So does that mean that we're going to be facing, that's the market value, and half of what we're buying is at the market rate, and we've got a rate now of 16.5 cents. Are we going to have a considerably higher rate in a month or so?
You will see a rate report coming back in August, and that rate will reflect some of the winter pricing that we experienced, as Union Gas experienced a significant winter increase in price. Because we weren't significantly hedged, we did experience that as well. We have not completed the full analysis on what that rate will be, but we can expect it will go up a little bit.
Okay. Councillor Gazzola, I'm going to have to ask you to hold off on your further questions. Your 5 minutes are up, but you can get back in the queue, okay?
Oh,
thank you, sir. Councillor Yaneski?
Yeah, questions to Mr. Boss. I was really impressed with your presentation. Thank you very much. A couple of questions that came to my mind in terms of your presentation, and just looking at the screen right now, you've got the market price, and there's 2 peaks in 2004, 5, and then one about 2008. What generated those peaks?
A combination of factors. The first one, 2005, took place in the 3 main driving factors where we were still in that period of rising prices, which reflects a generally tight marketplace. So demand had been growing faster than supply for several years, and we were in a tight market condition. It was a very hot summer, so demand for gas that summer was very high. And that was also the summer of Hurricanes Katrina and Rita. So those hurricanes, when they hit the Gulf of Mexico, destroyed some gas production facilities and further exacerbated a bad price scenario. The price spike in 2008 coincided with the commodity price spike generally. All commodities, that was when oil reached $142 a barrel, all commodities spiked in the summer of 2008. And then we had the financial market meltdown that occurred right after that price spike. So gas was pulled up with all other commodities in the financial market.
So really, the purchases of our gas is contingent and tied in with global markets. Is that basically it, as opposed to local weather patterns, and we have a bad winter storm, that plays hardly no impact?
It's fundamentally a North American market at present. Natural gas typically doesn't trade much outside of North America at present, only on the margins. That will be changing in the coming years. There are a lot of proposals actively being pursued to export natural gas from North America to Asia. So it will become an increasingly global market at that time, as oil is, et cetera. Yes.
Interesting. Do you provide consultant services to other municipalities or other groups based on what you've done here just this morning, out of curiosity?
Yes, we have a number of other clients.
What's your opinion if we go with recommendation number 2? Is that a wise move to go or not?
The challenge, if I may, before council is to decide what trade-off between the cost and the risk is appropriate for you and for the people that you report to. So when we work with our clients, we help them explore that trade-off, and then they choose the one that's right for them. So just as I wouldn't tell you the market's going up or the market's going down, I think what we've tried to do here is to put in front of you some comparisons of what that trade-off can be like. And so the one that seems most appropriate to your circumstance is one that you can choose. So I don't want to sound like I'm dodging the question, but I frankly don't have a recommendation between the two, because it's really that balance between cost and benefit is for the consumer to decide.
Thank you for your honesty. Looking at that chart on the screen, the bottom left corner, you talk about the yearly impact, maximum and minimum of the to the consumer, and it's shown as 23% maximum increase and 18% maximum decrease, and that's in a stable market. Yet when I look at the market responsive one, it's almost identical, 23% increase, and then the maximum decrease minus 22%. There's really little, or am I missing something?
No, it's an astute observation, but part of the reason for it is that in the market responsive portfolio, if we can characterize that year-over-year change, we're talking about the year 2 price versus the year 1 price. So in the market responsive portfolio, in some cases, that percentage change is less because the year 1 price itself is higher than it was in the stable one. So for example, if we went from a $15 price to a $20 price, that's a 33% increase, right? If we went from a $9 price to a $12 price, that's a 33% increase. Mm-hmm. So it was a bigger dollar change, but it's the same percentage because it's on a higher base.
Okay, I appreciate good analysis. Final question.
Sorry, Councillor Yanuski, your time just expired. If you want to get back in the queue, that's
already.
Councillor Singh.
Yes, thank you. So I had some questions that were answered through Councillor Gazzola as well, but carrying on with it. So the way the direction was given to staff to report back between timeframes of 1 and 3 and 5, and 5 being the way we're doing right now. So the market responsive portfolio would indicate a 1-year purchasing, I guess, policy. Would that be correct, or am I missing something?
If you wanted full market responsiveness, you would go 1 year and reduce the minimum and maximum rails.
Right. Okay.
Staff is recommending somewhere in the middle as a balance.
No, I understand that. So I just wanted to make sure that this is responsive to the 1 year time frame. So that would still give the rate stability year over year to the customer, that the rates wouldn't fluctuate beyond the year term. Is that correct? Difference to Union Gas customers whose rates are, adjusted quarterly. The market responsive portfolio, the rates would still be stable over the year. There only would be one price setting to the customer. Is that correct?
No, I would expect that if we went to that kind of scenario, we would have to adjust our prices more frequently.
Twice a year, quarterly would be?
Probably quarterly.
Quarterly, okay, all right. And also on 5-8, for Appendix B, it outlines that if we were to go change the policy to this, to the purchasing bylaw, that it would require periodic tendering for consulting services shall monitor for market and economic forces. Would that increase our costs to the utility by going with that procedure? Or is that something that we already do, that we tender out to consultants?
Mr. Grubauer.
Through you, Mr. Chair. It's something we already do. There would be no cost impact.
Okay. All right. Okay, that's it. Thank you.
Councillor Fernandez.
Thank you. Just going back to the report on page 5-2, the paragraph that starts, in addition to the rails approach, and it talks about in use since 2011, this added approach focuses on mitigating the risk of exceeding target. So why did we not use this approach before 2011?
Through you, Mr. Chair, not to my knowledge. Our company was retained in 2011. Some of the analytical techniques that we've added at that time
okay,
is what's being referenced here.
Okay, so then it's hard for you to speak to that. So, Ms. Houston, what was used before, and why did it change?
We used strictly the rails approach prior to 2011, and the risk sensor approach was added in 2011 as another mechanism for reviewing our rates and our purchasing strategy to make sure it was sort of a review kind of process.
Okay. Going over to 5-6. Sorry, that's not a question, that's a statement that I wrote down, so I don't want to ask that. 5-7. So essentially, regardless of whether we buy gas or Union, are we responsible for gas? Are we responsible for transportation and storage? Looking at the Appendix A in number 3.
Yes, we are responsible for transportation and storage under the current policy or any revision to the policy that you put in place.
Okay. And number 9 of that, you list all of the authorized staff who would be authorized for gas purchases, but where does council approval come in for that?
Council comes in into the approval process through the policy changes, and you provide direction to staff to fulfill the policy. It's similar to the investment policy we have. Staff fulfills the policy. Transactions happen very quickly on a daily basis sometimes, so it's not something we could bring back to council on a regular basis.
Okay. And if we were to, originally or many years ago, we didn't buy, but we got our gas from Union Gas. Is that correct? And then we switched over to our own utility?
That's correct.
Okay. And in doing so, we needed to create a whole department around that, a purchasing department and staff to monitor that. Is that right?
There are staff involved in monitoring that, yes.
Okay. So why wouldn't we consider going back to purchasing from Union Gas. I mean, it would, they could do the monitoring, they could do.
Staff had done a report on that previously. I forget the date that we did provide that up-to-date date. It's not a current, it's not available currently. After the deregulation, we're responsible to be the default supplier for our customers.
Okay. I do remember that report. I just wanted to clarify that. Okay. Thank you. That's all my questions.
Mayor Zaire.
Thanks. Just a couple of things. Firstly, in terms of the question related to the consultants, there are only two, Councillor Yanetsky was asking, in terms of municipalities. I'm not sure what was behind the question, but there's only one other city that has natural gas, and that's Kingston. So I'm not sure that, so the question may be put slightly differently. Do the consultants actually do any work for municipalities other than Kingston and Kitchener?
Yes, Kingston is not a client of ours. So the other municipalities that we advise on, it's for the purchases for the city's own use as a consumer as opposed to for their utility.
As a purchaser then. Okay, then I'd just like to go back to the one question that has already been raised and whether or not we could have some additional information. The charts here I think are really very helpful in terms of understanding the go-forward basis, and it is on a theoretical situation as we understand. Probably it's theoretical and could very well be, if those exact circumstances were there, then this is where the rates would come out. It would be not only theoretical, but it would be accurate. But until that's at steady state. Until we get to that point, the question that Councillor Gazzola raised, is the transition time between now and then. And Mr. Houston, you were answering about the other purchases that have been made. Can you tell us, not today and off the top, but probably for next Monday, presenting sort of a chart that would give us an indication of where we will go over that period of time until we get out of the current market purchases, or the pricing purchases that we have done, and into one of these two portfolios?
Are you looking for showing the transition in terms of percentage of the portfolio or in terms of what the price would look like? Because we won't have certainty around the price piece, but we could look at the portfolio piece.
I think it would be both, and recognizing that you don't have certainty on the price, and of course that's why we're dealing with this in the first place. But making some assumptions, and I would yield to our consultant in terms of generally where the market is likely to be going, save and except for some other extraneous things that nobody has control over. But it could be a parameter, within certain percentage. I think that's what we need to make sure that we understand and that the public understands, that we may choose one of these two policies, but that we're not going to immediately be at that. It's going to take some time for us to get into it.
If I may just back up to this. So under the current policy with a 5-year forward horizon, gas has been bought to the minimum rail for 5 years out. During this period of time, you see on the chart 2012, 2013, 2014, when market prices have been relatively low. And yet in the last little while, we've had an uptrend in the market. So qualitatively, the gas that you have in your portfolio for 2, 3, 4 years out is pretty much in line with the current market prices for that period of time. The market, so the mix of what you'd bought earlier and what you bought recently, there's not a big dislocation between your portfolio price and the forward market price. They're pretty much in line.
Okay,
Mr. Grunbauer,
Mr.
I
Grunbauer
may want to come back on that.
Okay, Mr. Grunbauer, you want to add?
Thank you. Through you, Mr. Chair. Mr. Zaire, we have the ability within the existing policy and the proposed policies actually to close out the purchases, the future purchases that we've made in years 4 and 5 beyond 2017 if that was the wish of council. Those current contracts are either at the current market value or probably better than the market value. In fact, if we liquidated those contracts, there might be a financial gain. Don't hold me to that, but these are, with the current market conditions, the contracts, the majority of the fixed price contracts that we have in place do not hurt us because they were executed at favorable prices in advance of the market moving up recently.
All right, so that I perhaps jumped to a conclusion then from Ms. Houston's comment earlier that while in fact there may be a slight increase in our rates in the short term, but it's not because of the hedging that we will have done, because the hedging was done at some of these lower rates, or at least for a portion of it. So I think it would be helpful, regardless of whether it shows that spike or it means that we're at basically steady state, that if it's possible to give us some projection on this, given what parameters, where the market price will be over the next 2 years. I understand the difficulty because as you take a look at any of these charts, any 2-year period, it's wild fluctuation. But I think that we do have to understand that going to this doesn't immediately mean we're at it. Thank you.
Thank you. Mr. Voss, could you switch back to the chart for the market responsive? Okay. Right, so looking at this chart, the intention being to provide a more stable rate. Obviously, the green line's moot if we're looking at comparison to spot rates. If I'm reading this correctly, the maximum, in looking backwards, the maximum yearly difference is plus or minus, it's minus 11 to a positive of plus 14%. Is that the absolute difference to market rates?
So under the simulated prices in this chart, this isn't meant to be historical, it's meant to be simulated. The KU portfolio would have had a maximum increase of 14% year over year, maximum decrease of 11% year over year. Okay. The proposed portfolio, or the modeled portfolio, the market responsive portfolio, would have been the other two numbers, 20, too small for my reading, 23 and 20.
I know the question was asked in the past, but is there a comparison of the staff time to administer between an approach like this and a purely spot rate approach?
I think when we've done the analysis in the past, I think our staff time will be spent on different things, as opposed to planning a hedging strategy. We'll be analyzing what price increases need to be put in place on a more regular basis. So the focus of the staff time would be different, but on our preliminary analysis, we didn't see significant savings one way or the other.
Okay, those are all my questions. There are still 3 people left in the queue. Councillor Gazzola.
Yeah. I just want to clarify in my own mind what the blue line represents in those charts. Is that the rate that we paid for our committed purchases?
The blue line in this chart, or in the other chart like it, is the price that the portfolio delivers. So it's a mix of the prices that were fixed a year ahead, 2 years ahead, 3 years ahead, if that was called for in the model, and the price of the current year. So it's the weighted average price of the portfolio under the rules for that portfolio.
Okay, so how did you arrive at that? This is based on the historical records then, right?
So to do this analysis, we had to sort of look at, let's take, say, for example, the portfolio price in 2009. In this case of the market responsive portfolio, the minimum rail for 3 years out is 0, for 2 years out is 20%. So that means 20% of the 2009 price was established by gas bought in 2007. So when that minimum rail came into effect, 2 years lead time, 20% of the portfolio for 2009 would be purchased. So the price of that gas would be the price trading in 2007 for gas to be delivered in 2009.
Okay, that's fine. I don't want you to use up all my time here.
Sorry.
If we'd have gone strictly market, the blue line would have been on top of the red line.
Exactly.
Okay. I want to go to do what we're doing requires a fair amount of knowledge. If I just ask you a question out the top of my head, can you tell me what is the general prognosis for natural gas rates for the next 5 years? Is there a word on people that know what they're talking about as to what that might be?
The conventional wisdom would be for prices to be modestly rising for the next 4 or 5 years. Modestly, not starkly.
Modestly rising. Can you define modestly? Would that be 2 to 3% per annum?
As you can see from the earlier chart, it's never a smooth.
No. But okay.
So,
I think you've answered my question. Modestly rising. Yeah.
If I may, though, the sort of the caveat to that is that the unpredictability of that path is the key consideration. So, in other words, we're not forecasters, and we don't.
No, and I won't.
Okay.
And you did clarify that we're in a North American market, so it depends on what happens in all of North America.
Right.
And they'll find excuses, even if there's a problem down in Brazil, to change the way they do with everything.
I'd also ask, just as a clarifying point, Mr. Voss, what do you think the average analyst would have said in 2000 and midway through 2007 that the prices would have done?
It's quite compelling because just a week or so ago I was at an industrial users conference where the discussion was around how low prices have been, how much gas there is, and many speakers made the observation that at the same conference in 2007, people were looking to see where could we import LNG to North America from the Middle East or wherever, because there wasn't enough gas supply in North America to meet growing demand. And in the intervening years, shale gas, which you've all heard about, has completely changed that story. So that's an example of the unknown unknowns that affect gas prices.
So in other words, just prior to and Councillor Gazzola, I paused your time. So, so just prior to that, then I guess my point was just prior to the massive collapse in gas, most speculation was that the gas probably exact same thing probably would have kept going higher.
Ever upward.
Sorry,
Yes.
Councillor Gazzola, please continue.
Yeah, okay. Just as an aside, I remember back in the 70s when we were dealing with this, and the world was coming to an end. There was not going to be any gas beyond 4 or 5 years down the road, and the price just went bananas. And all of a sudden, they found a lot of gas. But I want to go back to the point that currently there's a fair amount of work involved in dealing with risk management. We have a huge staff or number of staff people. We have consultants coming in. Is it right to say that if we bought on the spot market, you don't really have to have a tremendous amount of knowledge? You're just buying what it is on the daily or monthly price?
As I mentioned before, the time that you save on your hedging portfolio and analyzing the market going forward, you're going to spend setting rates quarterly for your customers. We will save on consultant costs because we won't have to do the hedging program, and that was mentioned in the report.
The point I really want to clarify, that to buy on the spot market, there's no speculation involved. It's, what's the price, and here it is.
And the other thing we do have to manage, though, is quantities. We have to ensure that we have gas available for our customers at the time that they need it. So that's the other piece we still have to manage.
And that was something else I was trying to learn, as to just as what kind of storage facilities do we have? How much we annually buy 200 million cubic meters. How much can we store? We store a month's supply, or what?
Through you, Mr. Chair. Councillor Gazzola, we have, I'm going to have to try and do the conversion in my head. I think it's about 80 million cubic meters of contract storage with Union Gas. It's about 3 million gigajoules. And that compares to our annual delivery volumes of about 10 million. Which is 260 million cubic meters. We buy 200 million cubic meters, Councillor Gazzola, but our customers supply another 60 on top of that, which we deliver, and our storage balances the requirements for all our customers, including those who provide their own gas supply.
I'm sorry, how does that work? Who has to store that for those other customers?
That's one of the things that we do outside of the price risk management, is we manage that storage contract on behalf of all our customers. Basically, store it in the summer, withdraw it in the winter.
Okay, how much can you store for your own customers? Can you store a month's supply?
The storage is used on a seasonal basis to manage the requirement in the winter period. We don't use storage to park it for a month and trade it or make money on it. That's what the marketers do. We're a utility. We're managing it on a seasonal basis to make sure the winter demands are met.
Okay. Councillor Gazzola, your time's expired. Again.
I wish I were a non-elected person. I'd have gotten more time if I came in. Okay. I also would like to make an amendment to the motion that's coming forward.
I will come back to you. Councillor Yaneski.
Back to that chart that we have here, bottom left-hand corner as well, but the bottom two lines, and you said that the decrease of the percentage being 23% and then minus 22% is reflected in the dollars below. Is that correct?
Yes, that should be correct, yes.
Well, then help me understand that if we look at the maximum increase being $192, which I'm going to assume that's correct, and the decrease seems to be $103, which is another $100 or $100 more, but you look at the percentages above, they're almost equal. How can the decrease impact in dollars be $100 more if the percentages are almost the same, although they're going the other way?
Mm-hmm.
I don't understand.
So again, it's a question of what is the numerator and what is the denominator in the exact year-to-year comparison that we're making. So for example, the biggest price drop, looking at the chart, is probably from 2008 to 2009. So if you take that price delta and divide it by the 2008 price, which is very high, you get a smaller percentage. Does that make sense?
Yes, it does. It's how you play with figures, right? You don't play with them. It's how you how you use them.
So all we're trying to illustrate is the experience that the consumer would have. So in this example, their 2009 bill would be $300 lower than their 2008 bill, given the volatility of the portfolio.
Okay. I understand where you're coming from, and I know how the math works. Using that same chart, there was another chart. there was a breakdown as to the number of dollars per gigajoules or something like that. Was the dollar figure?
Yes,
I forget where that
it's
was.
in this chart, same box, just a little bit higher, the average price over the period. Is that
okay.
the price you're referring to?
From 2002 to 2014, inflation happens. I mean, we've had inflation. Does the dollar figure reflect, is the inflation taking recognition, the inflation factor in this dollar analysis here? Or is that just sort of a constant somehow? I don't know.
These are just dollars of the day. There's no inflation built into this. It's just, so if it was $3 in 2003, that's averaged with $6 in 2010. It's just...
Okay. I know where you get. Okay, thank you.
Councillor Singh?
Yeah, thank you. Just going back to my original question, and where my confusion comes a little bit is at the fact that Ms. Houston said that the rate setting would have to be more incremental periods throughout the year rather than more stability. And the way the direction was given, and it was to my understanding that we were given a clear response through those engaged, our citizens and customers, that they were looking at rate stability, not necessarily as to how we're purchasing, what best practices for purchasing. Simply, they don't want their rates to be changing every couple months. That was my understanding out of that survey response. So in coming back with the market responsive portfolio versus a stable portfolio, so can the market responsive portfolio still not have that 1 year rate stability at least? Simply because we're not going spot rate setting. We're still purchasing for longer periods. We just have lower rail minimums. So if you can just explain that a little better.
Sure. Sorry, Councillor Singh, I misunderstood your question. I thought you were referring to the 1 year scenario. Where we are only purchasing out 1 year, but if you're looking for stable rates over a 1 year period, that would still be our goal regardless of which of the two options in the recommendation you choose.
Well, that's still confusing because you answered Councillor Gazzola that if you were to go with a market responsive portfolio, we would still need the same type of staff complement because then they would be having to look at more rate setting, more frequent rate setting in a given year. So are we
but
sure?
There is still some hedging even in the 3 year scenario with the market responsive recommended rate.
Okay. So for clarity, so before making this decision on my part as to which way to go, the market responsive portfolio would still allow us to set the rate once a year as we do right now.
That would be the intent. It's something we would have to monitor throughout the year. If we had huge spike increases or decreases, we'd have to review that on a regular basis to, if we had to adjust earlier.
That's understandable, but
excuse me.
In a normal environment. So.
In a normal environment, we would still go towards a goal of annual rate setting.
Okay, thank you.
Councillor Fernandez.
Thank you. Just one question that I actually forgot to ask related to 5-2. Can you give me an idea what the actual number of customers per year to get a more accurate variance, total variance? So if we had a really good idea what the actual number of customers that are buying from KU and what the total annual variance would be.
I'm not sure where on page 5-2
well,
are you referring?
It's talking about the at what point do natural gas rates either become too stable or stable enough to satisfy the majority of Kitchener utility customers? So I'm asking what the actual number of customers per year are so that we could get a more accurate total variance.
I think currently our number of customers is roughly 66,000 customers that we provide supply service to. I'm not sure how you're going to get something more accurate than what you're seeing in front of you already.
Okay. Maybe I'm not phrasing the question correctly, I suppose. What I'm trying to get at, I guess, is what the are we looking at the variance with just our KU customers, or are we looking at the general population? What our population is? Is there a difference there, or?
All our analysis has been done on the number of KU customers that we supply gas to.
Okay. All right, then it's just my confusion. Okay, thank you.
Okay, I just have one final question. You mentioned if again, and I realize it's not part of this recommendation, but if we went to a spot rate in terms of the staff administration, it would be a wash because staff would have to, instead of speculating and purchasing, they would have to be rate setting quarterly. Now, I believe the question was asked before, but I can't recall the answer. Is there any OEB regulation that prevents us from going to a spot rate but still setting the rate once a year so we would be able to average, say, the previous year?
So just for clarity, by spot rate, you don't mean option 2. You mean, everything spot rate.
Right.
I don't believe there is an OEB regulation that would prevent us from setting rates once a year. The challenge would be is you'd have a huge variance, either positive or negative, that you'd have to make up in one rate setting. So it would create a lot of volatility if you did it that way. Assuming there was huge fluctuations in the market. If you had a stable market, you wouldn't have that scenario, but you could.
And can you speculate as to the danger if there were a huge variance? From my understanding, the only danger would be that the resident would face the accumulated increase the following year, averaged out.
It would be that, plus it would be our carrying costs of carrying that deficit for that period of time. Okay. If it was a deficit situation.
Okay. Thank you. Councillor Glenn Graham, we'll go to you to move.
I had another question.
Oh, another question? Apologies. Councillor Gazzola.
Yeah, I asked that very question. The last time we were looking at this, I still believe that we could change our billing once a year. Now, the reply I got back from your staff was that the Ontario Energy Board's guideline is no more than a 10% impact on the bill for consumers. So, which is correct?
Mr. Grunbauer.
Through you, Mr. Chair. Councillor Gazzola, that answer might have referred to what's called the trigger in the quarterly rate adjustment mechanism process that's the board is looking at. And it's absent that 10%. There may be an option to not change the rate for the next quarter, but I haven't been aware that that's been invoked any time recently.
Okay, so the bottom line is here that we could even though for many, many years we did change the rates on a quarterly basis, we could go back to changing the rates once a year. When you talked about there could be some financing costs, would that not be that would be part of the supply pool, right? And it relates just to the supply portion.
Yes, but it would impact the rate that you set.
Okay. Okay, so the other thing, I was trying to see the variance, keeping in mind that 10%, from what I see, the worst case scenario would have been a 14% increase, no matter whether we're on the stable or the market responsive policy. The worst case scenario is 14%.
The 14% value is the greatest year-over-year increase that the KU portfolio returned. In other words, the current policy under this simulation.
So regardless of whether we were on a stable or a market, the maximum worst case scenario is the same.
No, the 14% refers to the current policy, the one that's now in effect. The worst case scenario for the market responsive one is 23% by comparison.
Okay.
The worst case one for the stable one was also 23% by comparison.
Yeah, I'm not sure I'm clear on that, but I'll leave that for another time. Okay. I do also have an amendment.
Okay, and just to clarify, that 23% looks exactly like that line right above 2009, I would guess, in the chart. Is that what you're referring to, between the blue and the red?
I beg your pardon, I didn't...
The 23%, it's by this, basically that figure is the difference in this chart, correct? Between the blue and the red, the percentage? So it would be above the 2009, or am I misreading that? It's moot, it's fine. We'll go to Councillor Glenn Graham to move the motion, please.
Thanks very much. I will bring forward the recommendation with option 2. May I speak to it briefly now?
Please.
So I believe staff have done a good job in trying to strike a balance in recognition of the fact that people are looking for some stability, but also recognition that there's an opportunity to move towards a more market responsive level. And I think that I do commend the research that has been done by the residents to bring this forward. I think that this is an opportunity. I'm glad both options do recognize there's an opportunity for market responsiveness, and I do support the second option because I do think that there is a premium involved, and it's not clear to me what that premium is per year for the average household. But I do believe that if the average household had a choice between knowing that there's a premium for stable, that they would choose the second option. And I'm not sure that that was clear in the survey. My rationale is that I think that we should be closer to the market. That there's, I think that people will accept some small volatility for less premium. So I do support this, and I thank staff for all the work. It is quite confusing, this, but I'm glad it's going to be reviewed periodically, and I do think we should check back with the public on a frequent basis because we do recognize that the appetite does change over time, but I do think that ultimately this is about responsiveness to the public's level of risk, and of course it's about public engagement.
Councillor Gazzola?
Yeah, I want to make actually a motion that states that we move to the strict market response and purchasing our gas on the market the way all of the other basic natural gas companies do in the province. It's something that we are committed for the next 4 or 5 years, and I would not suggest doing anything with what we've already committed to, but to move in the future so that we're on a fully based market basis the way we used to be. I don't believe that we're going to need to change rates every 4 months. Every 3 months. That was one of the reasons that there seemed to be opposition to this. I mean, we used to do that. Once you get into the routine of doing that, changing the rates is not a difficult thing to do. I don't think it's that time consuming, and so it's something. But the whole thing of not going that route puts us into the field of speculation. We're hedging. We're hoping that prices will go up, go down. We, as a government, we're not allowed to do that in anything else. When it comes to our investments, for example, that we're allowed to make, we can't get into the speculative market. We're really restricted on the type of investments that we can put our money, our excess funds in. We have to go better than blue chip. So, in this case, we shouldn't be going. What we're doing is going into the speculative market. We should leave that up to. There are other suppliers out there that can supply our customers if they want to go that route. They can go to these marketers, and we couldn't care less. There was a time when we looked upon that as losing faith in our local company, and we frowned upon that. But since then, the rules have changed, so we don't care who they buy their gas from. We still make our money from them using our storage and our lines. So it's not going to hurt our bottom line one iota. But yet it does give the customer, our customer, the opportunity that if they want to go strictly to the market value, the way their sons and grandchildren do in Waterloo and Cambridge or Toronto, and it's a very comparative market. They can do that by sticking with Kitchener Utilities, or if they want to speculate on what's going to happen down the road, they can go to these marketeers. There are all kinds of them out there with speculative prices. So for that reason, I'd like to see us move back to that direction where we used to be. And I just want to say something about public engagement. Yes, we did go to the public, and we did give them an opportunity. But I really don't believe we gave the public all the information we should have given them. After we did that, staff came out with an excellent chart and report that clearly indicated the impact over almost a 15-year period as to what really was the impact. Now, people looking at that, being engaged in dealing with this, should have had that information when they were being polled and asked for their opinion. And I think if that information had been available, I think the results would have been different. So I urge council to take the step and to get back in line with the rest of the utilities in our province and our own hydro utility. We deal in the same way with that. It's purchased on the spot market. The one last thing is that this volatility, there's nothing more volatile than the price we pay for gasoline for our automobiles at the pump every day, and those prices go up from morning till night. So I think our constituents are smart enough to deal with that.
Thank you, Councillor Gazzola. That would be contrary to Councillor Glenn Graham's motion, so if it fails, then you can bring that motion forward afterwards, because... Exactly. Okay. Mayor Zaire. Certainly, yep.
Thank you. That was going to be my first comment, in the case of hydro, by the way, we don't have a choice. Hydro doesn't have a choice, and it's really spot because it's based on an hourly rate, and it changes many times during a day potentially. So there is no choice at that point. It is easy to be critical of the survey, any survey, and I don't think there is one survey that this city has done ever that hasn't met with, well, if we had asked this question, we might have gotten a different response. And in fact, there have been surveys that really weren't surveys that this council has relied upon from time to time. So I'd like to talk about what's best for the future and not what is in the past. I believe that the suggestion through a question earlier on was, could we have a single rate for the full year by using the spot market? I think that would lead to very dangerous spikes or potential spikes, and would be absolutely contrary to what the survey said. The general tone of the survey, even though you disagree with a particular part of it, the general tone of the survey said some sort of stability. That would be the extreme, I believe. I will be supporting the recommendations as the market responsive portfolio policy, because I think it actually gives us the best of both worlds, and there are many variations that can come on this. I do not want to be in a position where saying, okay, we're going to be spot market, and to the greatest of extent, and if you want to have it locked in, go with one of the other marketing companies who provide that on an annual basis. We have heard some anecdotal stories of what that means in terms of customers being locked in for a period of time that they may not wish to, and not fully aware of what locking it in means, not only for the hydro or for gas, but for other potential utility costs as well. So I would not be want to be putting myself in a position to force the public to have a more stable rate by going with one of those companies. That is still their option if they wish, even today, currently, and under a new policy that we would establish. So I will be supporting option number 2.
Councillor Galloway-Seelock?
Yeah. I was happy to brought forward the options to staff in the last meeting so that we had options really to work with. I think that the number 2 brings forward a compromise that allows us to have flexibility with the policy and to listen to those who wanted stability, but also to those who want to play the market a little bit. With the change to just a 3-year, it allows us to review the policy more often. In fact, that policy goes as far to say we could review it on an annual basis. And that allows us to react accordingly at the time. This new policy definitely gives us much more flexibility than we've had in the past. As Councillor Gazzola already said, hindsight's 20/20. So we could be sitting here in a year, 2 year, 3 years' time and be saying the exact opposite than what we're saying now. We should have done something more stable for our customers. There have been years where KU customers have been ahead, but I think everyone's willing to pay just a little bit extra, and I mean a little bit, and that's what this market-responsive portfolio does, in order to have stable rates. I haven't criticized the survey. I won't criticize the survey, because I think staff did the best job that they could and got the response that from the community that is appropriate moving forward. They want stable rates. They don't want the volatility. It's been said that there's no speculation on the spot market. That's correct, but there's also no stability, and our customers want stability. At the end of the day, my decision sitting around this council is to listen to the customers, and they've clearly spoken throughout the survey. And I will support the recommendation of number 2. I think it's the right action moving forward. It doesn't make us susceptible to major rate changes. And I think it's really important for our customers that they have stated that they want yearly rates. And so I think this is the best option moving forward.
Thank you. Councillor Etherington?
Yeah, through you, Mr. Chair, I'll be brief. I also support the option 2. When I invest money, my paltry few dollars, I always look for security. I would not sit here and expose taxpayers to the level of risk that is being suggested by Councillor Gazzola. So I'll certainly be supporting number 2.
Thank you. Councillor Urbanovich?
Thank you very much, Mr. Chair. And I guess I'm pleased that you added the clarity around the motion being contrary. I guess I would also question whether or not, in fact, that type of motion would have required a motion to reconsider in light of the previous motion that's been approved by this council, and I leave that for something for you to consider. And that motion previously approved, which had moved us into a modified, stable approach, is the position that council had taken, and these are now recommendations that we're considering. So I'm not sure that going to a spot market wouldn't require a motion to reconsider again.
And on that point, I'll ask staff if they could look into that. I don't recall if we voted on, I think that we voted on this the first time. I don't think there's actually a motion on the floor for spot rates, but if staff could look into that, that would be great.
No, but my point being that we voted on not going spot, but going with a certain direction. And there was a recorded vote, and that motion is actually on page 5-1 of the report. So I'm not sure that it, in fact, could even be considered without a motion to reconsider. Having said that, I will be supporting the motion that's on the floor for the market responsive portfolio policy. I think a number of comments have already been made, but what it does, in my view, allow to do, just to reiterate, is to give stability to those residents who are looking for that, but as well as provide a little more opportunity to take advantages, hopefully, from some of the fluctuations that occur in the market around us. I know comparisons have been made that this is perhaps not unlike purchasing gas at a service station. I guess my point to that would be that residents have many more transportation options. If they don't choose to drive their car, they can take public transit. They could, look at a variety of options of getting around. Someone who has a home heating system, while they could switch to oil, I guess, which is more expensive, or electricity, which is more expensive, there isn't that same degree of option there. And so I think it's incumbent on us to listen to some of the responses that came from the survey. I'll also remind all of us that we did have an opportunity to sit in on the focus groups that tested the questions from the survey, and I know a number of us did. I remember Councillor Fernandez was there, and I was there. I think some others were there as well. And so that provided an opportunity, if we had concerns to the questions, to raise them at that time. I'm pleased that the motion that's before us, I think, reflects what we heard from the survey, and also reflects from some of the delegations that we've heard from on this issue, both today and in the past. So with that, I'll be pleased to support that motion.
Thank you. Councillor Fernandez?
Thank you. It's interesting that we're going, it's been quite a long learning curve, at least certainly for me. And I do want to take a minute to thank both Mr. Donald, who I don't see here anymore, and Mr. Drewitz for bringing this to council, because I am a little bit concerned that we would have carried on the way we were, and that citizens can become that engaged that they can actually make a difference. And I think that's what really needs to be understood by the general public, is that citizens can make a difference. I think it's really crucial. The policy that's under review, it's very difficult if you look just purely at the survey that was done. You can also look at the Kitchener Post survey, and some may say that that's not correct to the standards of surveys, because it's users only or readers of the Kitchener Post only. That showed a different slant. That showed that the interest was there for some variable rates, and we're more accepting of variable rates. So I think that although some may say that being able to buy your gas, natural gas, at the spot market is you don't leave the customer that many options, I think you do. The customer now knows, publicly anyways, that there are various marketers out there. If they wish to choose a more stable and more predictable rate, they can. That doesn't also include the fact that they can go to an equalized billing. Certainly, at the end of the year, or whatever calendar year, there were a couple of calendar years thrown around here, November to October and January to December, they may see a spike in their bill. But for the most part, and I've been subscribing to Equal Billing for a long time, very rarely have I seen those spikes. So at this point, I'm seriously considering supporting Councillor Gazzola's motion. I think that certainly for the interim in the next year or so, or two, I think it would be very helpful for the public to be able to see what happens when our rates are a bit more variable. I understand that some of us are more comfortable with stable rates, and this option number 2 does share both stable and some fixed. So that's the way I'm leaning at this point.
Councillor Singh?
Yes, thank you, Mr. Chair. And I'll be brief on this as well. I think it's already been said of all the merits for option number 2 for market responsive portfolio policy. It was very clear through our citizen engagement and the survey that our customers are looking for stability, and at the same time, I think if they were asked that if they can get more favorable market rates as well, I think the answer would be similar to yes as well. And I think this option with a market responsive portfolio achieves that very effort, giving stability to our customers, which they desire, at the same time ensuring that we are not locked out of more favorable market rates if the market were to come back down. As for spot rates, I think this option is the best of both worlds. giving customers exactly what they've kind of indicated to their utility and this council, as well as if customers are looking for more stability, I think there are other options in the market that they can go back out to. Based on those very reasons, I would be very supportive on option 2 and will not support spot rate purchasing.
Okay, Councillor Gazzola.
There were a couple of comments that were made. That
Right,
were
point of privilege, yeah.
Yeah, just for Councillor Etherington, you know, hedging is speculation, and that's when you're buying on the spot market, there's no speculation there. I want to clarify this. I'm not faulting staff or anything. I think they've done everything that council has asked. And when we did go through the survey with the public, I'm not faulting the people that did the survey. I'm not faulting the public. I'm just saying all the information wasn't there. And it wasn't till after that staff did come up forward with a really piece of information that clearly indicated what the difference was. And I'm just saying I have enough confidence in the public that know what they're doing. Had they had an opportunity to look at that information, that I think they would have voted in a different fashion.
Okay, I'll close it out. First, I'd like to thank staff as well. I definitely had issues with the survey. In fact, I voted against it, but that's not a reflection of staff's work on the survey. I simply thought, and I think there was some miscommunication about the ability of the public to understand, and it wasn't that. It was the investment of time and the numerous documents and presentations that council and committee were able to review, whereas the limit of the extent of the information that the public got was very minimal, because there's a short period of time in a phone call or a survey at a facility, that sort of thing. And I don't think things such as the delta in the costs were clearly communicated, and I most certainly don't think that the idea that there is an opportunity for choice in the private sector as well for people that are looking for long-term rates, that wasn't communicated in the survey. Again, not to staff's fault, but those were my biggest concerns. What we have before us is closer to spot rates. As a matter of fact, I'd argue it's not terribly stable if you look at the lines on the chart in front of us. Effectively, the red and the blue lines are within hairs of each other. So what we're doing is we're adding a tiny bit of speculation and extra staff time without any real stability. So I'm not really seeing a whole lot of benefit in what we're doing here, even if you take the survey into consideration. So again, like Councillor Gazzola, I will be voting against. I think it's not. The unfortunate reality here is that it's not. If the Kitchener Utilities doesn't offer spot rates, nobody gets to have the opportunity to have spot rates, because there's no business case, there's no marketing model for a private sector entity to offer spot rates. We're the only ones that can do it. On the other hand, if we offer spot rates, the private sector, there is an added value, because they'll be the ones doing the speculation and adding the premium. There is a value to them to have the fixed rate model. So I'll be voting against it. Having said that, if this goes through, I'm not terribly concerned, because we are terribly close to spot rates as it is. So with that, a recorded vote has been called. Okay, those in favor? And opposed? Motion carries, and we will move on to item number 6, the Centre in the Square Deferred Capital Maintenance. Mr. Haggie will speak to it briefly, and I understand Mr. Marcus Shantz is here, who's the board chair, to respond to questions as well.
Thank you, Mr. Chair. So I'll just give a very brief summary of what's included in the report. Essentially, the Centre in the Square has written a letter, which is attached to my staff report, requesting $350,000 of additional funding for their capital works at the facility. As is noted in the report, the facility that the Centre in the Square operates in is actually owned by the city. So it's a city facility that's essentially operated and maintained by Centre in the Square. And each year, as Council is aware, the city provides a capital grant as well as an operating grant to Centre in the Square. In 2013 and then planned for 2014, the Centre in the Square has spent considerable money on capital upgrades and capital works on the city's facility. And that has essentially depleted their reserve fund, which has prompted the request for additional capital funding. Staff have reviewed the request that's made by Centre in the Square and are recommending that the funding be granted to Centre in the Square for the works to be done on the city's own facility, and it would benefit the city's assets. There are other things that are included that the Centre in the Square is funding for, or is providing their own funding for, but they're asking for additional funding from the city as well. And as noted in the financial implications section of the report, the funding can come from the General Capital Contingency Account, which has a balance of about $400,000 before considering this request. That capital account is held specifically for unknowns like this, so it's kind of a good thing that the city maintains a fund like that, that we can entertain these types of requests. So in short, that's a summary of the staff report, and as has been noted, the chair of the board is here to answer specific questions about the Centre in the Square's request.
Thank you, Mr. Heggie. Councillor Galloway-Seelock.
Yeah, I have a question with regards to the letter, the last paragraph on 6.3, so the first page of the letter, talks about the $962,000 that's invested into the centre, and then asking for the $350,000 to cover a portion of the funds invested into the facility. So in reading that, am I understanding correctly that the $962 was invested and that the $350 is just asking to recover some of that cost?
Through the chair, essentially, yes. The centre's allocated a lot of funding from their own reserves in the past year, and it has essentially completely eliminated their reserve. So they're asking for the city to invest $350,000, which essentially would provide a balance in their reserve fund.
Okay. That was my big question. Can I make comments now, or should I wait?
There's 3 people in the queue. I think make
I would
comments.
I'd like to, at the appropriate time, make a motion for deferral until the operational review is complete on this matter, just so that everyone kind of has that. I can make comments at the time then.
I appreciate that. Thank you. Councillor Gazzola.
I just want to ask you, since we've been reporting on the value of our assets, do you know the value of the Centre in the Square? Do you know that would you know that from?
I don't. I'm not sure if that's a separated line in the statements. My understanding is Centre in the Square actually has their own statements that we consolidate in, but we wouldn't show them specifically.
Do you have any idea?
I do not. Okay. The board chair does.
Okay.
Morning, Mr. Shantz.
Thank you. I don't have a hard number on the current value of the asset, but if you look at recent halls that have been built in the last few years, you're in and around Ontario, you're talking, to get a hall like the Centre in the Square, you're talking well in excess of $50 million, and I think closer to 100. That's, of course, not what the value is on the books.
Okay. Councillor Fernandez.
Thank you. Just going through this chart of the additions and reconciliations, I want to make sure that I understand what it says code deferred. Those are all items that were deferred into the future, or maybe a better, can you give me a better explanation? So there's a whole line that says code deferred, so, I mean, elevators, compliance, box office upgrades, elevator door, all that.
We've, and our staff have done a number of audits of the building to see where we comply and where we don't comply. And compliance can relate to building code matters. There's things like AODA requirements that have accrued. And so when it says deferred, I believe that means we've simply noted them and we're waiting for the time when we have the funds to invest in those repairs.
Okay, and then any of the other lines, so production related, that was work that was done because it would help improve the quality of the production or the quality of the concert goer to the center in the square. Is that be my understanding of that?
There's a variety of items that were invested into. Some of them, again, relate to structure. Some of them relate to code. Some of them relate to the particulars of behind the stage and set requirements, which can also get into to safety issues, the rigging and so forth. And some of them were more in the nature of just enhancements to facilities that hadn't been replaced since the 80s.
Okay. And what would happen if we didn't approve this $350,000? What impact would that have on the center and the square?
I don't believe that we would have the cash flow to proceed with some of the investments that we already believe are required for this year. So there's another tranche of roof replacement that's required. There's certain other items that are listed on that on the last sheet in yellow that we've itemized. So you'll see in the final sheet we've identified $2 million of capital improvements that are pending, of which we intend to do just over $500,000 this year. So if you don't approve this motion, I believe that's thrown into doubt as to whether we can proceed with those items, because it's about topping up the reserves and helping with our cash flow.
Mr. Chapman to add?
Through Mr. Chair, I'd just like to take you back to your question about those items coded as deferred, just to make sure that you're clear on the response. If you're looking at page 6-7, my understanding is all of those amounts were actual costs incurred in 2013. So everything shown on that page has been spent, and the center simply categorized them based on the nature of the expenditure. So those items which are coded as deferred in the 2013 actuals were items that had been deferred from previous technical audits but could wait no longer and therefore were completed in 2013.
Okay, thank you for that clarification. I appreciate that.
And I would just point out that the items which are highlighted on that page roughly correspond to the $350,000 that the city is being asked to fund. So the city's funding would only really be applied to major building components which had been deferred in previous years.
Okay, thank you. Thank you for your answers. Appreciate it.
Mayor Zer.
Thank you. Has the motion been put forward yet?
No, but Councillor...
I'm prepared to do that.
Councillor Galway-Seelock indicated deferral as well.
Sorry?
Councillor Galway-Seelock indicated deferral, yeah.
Okay, well, it first of all has to be on the table.
Yeah.
So,
yeah, it was a forewarning.
And I will do that and speak to the deferral, because I think the deferral would have been to the operational review. We, of course, need that operational review to look at a number of things, but this has nothing to do with the operations. I want to speak to the point that I want to make on the motion refers specifically to why we need to do it now, or why we should do it now.
Okay, then if you're speaking to doing it now, please continue.
Yes. The staff and the board of the Centre of the Square made some, I believe, to be some very prudent and required decisions in order to ensure that the facility met the appropriate standards, including some health and safety issues. And in fact, I believe that we, as a city, unbeknownst to us, and I grant you that, have not invested enough in that facility in the past. Things, as we know from the schedule and the number of years on the comments on the right-hand column, would indicate have been deferred for some years. And I'm not going to get into why they've been deferred. Probably, I do know, mainly because of cost. However, what it has done is really been a catch-up, and it's a pay me now or pay me later. The facility did require, and still does require, some major fixes to it. And I think that we have to remember that it is our building. It's the city's building. We have the ultimate responsibility for that building, and therefore, if we were to not approve this and simply say, well, Centre in the Square, go away. Yes, you've eaten up your reserves because of it, but that's tough. Well, that would put a constraint on the Centre in the Square for many, many years to come. And we would have to bear the consequences, I believe, for some of the things that may not get done in that building. It is our responsibility to make sure that our assets are dealt with. This is not an item that has anything to do with the operational review. It is a capital issue, not an operational issue. And this building is, I forget the exact number of years, I think it's roughly 33 years old. And there are some people on that board who deal with buildings and the nature of buildings who are quite astonished at the level of investment that we've put into the building in terms of upkeep over the years. And at 33 years, major components are going to need to be replaced. So I believe that we need to stabilize that issue. And yes, there are other matters that will be coming forward to this council and shortly related to the Centre in the Square and the operation of it. But this is quite separate and apart, and they should not be commingled. So I am moving the recommendation as it is.
Councillor Etherington?
Yeah, through you, Mr. Chair, I just wanted to say I'm a big supporter of the centre, but I presume these, as the Mayor was saying, these costs, these extra costs, didn't come out of nowhere. I wanted to ask, how long have these maintenance items been backing up? How many years? Could I get an answer to that?
The city's contribution, and it's noted in the report, is around $246,000 a year. It was increased from, I think, north of 100 a few years ago, and then we obtained ticket revenues around 250 for capital. And in my time on the board, it's in the last 2 or 3 years that it's become pronounced that it's more and more difficult to keep a lid on those repairs.
I guess for me, one of the other questions is we, as a council, we have members on that board, and this is the first I've heard of this cost. I don't like being sideswiped by this type of request. And so I would ask, what would be the consequence of a deferment on this question?
As I've noted, I believe that we would simply be unable to authorize moving forward with some of the capital improvements that we have identified for this year because the cash flow isn't there. And I think that from my sense of the review, I think that the review itself, once you receive your report, I believe that there will be process to follow. I don't think there'll be a silver bullet that gets adopted this summer. I think there's going to be work to be done in terms of finding out how to close the gap and how to close the funding gap. So I don't know how long you would be deferring.
Yeah, I'm not talking about a huge period of time, but I tend to agree with Councillor Galloway-Sealock that before approving this kind of money, I'd like to see the whole picture, not just part of the picture. That's all. That's my comment, Mr.
Thank you. I'll have a couple questions and then we'll get back in the queue here. My first question is, why didn't we see, I hate personal preference, I hate dealing with expenses outside of budget time, so why didn't we see this 5 months ago during our budget as an issue?
I wasn't here for your budget meeting, so I can't speak to that that particular question because I wasn't there. However, I think that I think that the capital requests that we have for this year, the 510, are fully, I think they're reflected in the 2014 budget that was presented to council. I think the question is what the 2013 budget said, and I think, and I'm trying to be careful because I haven't looked at the numbers, or I haven't reviewed them recently, but I believe that much of the capital that we put forward in 2013 was actually intended to be spent.
So with your comments and coming some months after budget, would you characterize this request as an emergency request?
It's a request for funding that's required to carry out capital repairs that we believe are required this year.
Okay, thank you. A couple questions of staff, if I could as well. When do we expect the operational review to be completed? Mr. Chapman?
Through you, Mr. Chair, we anticipate it will be completed fairly shortly, and although we're working with the consultants still, we're targeting the date of August the 25th for a public review or dissemination of that report.
Okay. And final question, the proposed funding would come from our capital contingency, which has $400,000. We're not yet halfway through the year. So presumably that would only leave $50,000 for future unforeseen expenses.
That's correct. It would leave you somewhat exposed, but as Mr. Heggie pointed out, this fund does exist for this purpose, and the amount in the fund represents basically the 2013 and 2014 allocations.
Okay, thank you. I'll go to Councillor Galloway-Sealock. Actually, there are other people in the queue here. Would you mind holding? Sure. You can.
I just want to ask a question of Marcus. Understanding a little better from some of the stuff that I've heard, would at this point any amount of funds help? Because you said it's cash flow. That's what you need is the cash flow in order to do the work in 2014, because you have the budget to do the work that you've approved, right? So it's just cash flow. So if we were to consider giving $100,000 so that you had the cash flow in order to do some of that work, because the city's already giving you your annual allocation of $250,000, so you'd have $350,000 to work with in order to do that work. Would that be better than no money at all moving in the short term if it's tied to the operational review?
I mean, I think any money is better than no money at all. So yes, something is better than nothing.
Thank you.
Thank you. Councillor Gazzola?
Yeah, I'll start off by indicating that I sit on the board also. I concur with Mayor Zare's comments. This is a different situation. It's capital as opposed to operating. The bottom line here is the city owns the building.
Point of order. Thank you.
I'm sorry. I
thought
it was
no. It's no fault of your own. I let Mayor Zare begin with comments. So if you don't mind holding off for just one second, does anyone else have questions?
I don't want to.
Yeah. Does anyone else have questions of staff? Councillor Glenn Graham, having the queue, questions of staff or comment, or questions of delegation? Yes, Councillor Glenn Graham.
Thanks very much, Marcus. And I guess it's just a question of detail for me in terms of the the extent of the repairs that this would cover. And so I was wondering if that would be something that we could have just in terms of what this additional money would cover in terms of the timing of it. Would that be something that we could see before us?
And I'm not sure this helps for your question, but on the sixth page of the staff report, it itemizes there's a summary for 2013 and 2014. So what you'll see is that this is, as was already noted, a request in respect of helping us to deal with reserves that were depleted from what we spent last year. And so the 350 is applied to help with those reserves, and then that gives us the cash flow to deal with the project that we've confirmed for 2014, which is just north of $500,000.
Okay, thank you. That's at least helping me understand.
And I'm sorry, if I can add, the items then are listed on 6.8 to 6.9, and you can see the various items in yellow are the items that that we would like to deal with.
Okay, so that's helping connect things a little bit more. Thanks, because it wasn't clear to me where the connection was. So it's not a question of helping the center and the square. It's a question of, I guess, transparency of this timing, certainly, because these are issues that have emerged over time. So it would have been as prudent to have this before us earlier. And certainly I know that that's not a reflection on you, but it just, I guess it's one of those issues of process that more information to us and the public as soon as possible is the way to go on this. But I will be supporting the recommendation. Thank you.
Councillor Janeski, question or comment? Question?
No, basically comments. I have
okay,
no
can you hold off for just a moment, then,
yeah.
please? Thank you. Councillor Urbanovic, question or?
Yeah, just one question, and thanks for coming in. If we were to defer this, what would the actual operational impact be? I mean, I guess I'm trying to just understand, is there some safety things that are absolutely essential happen sooner rather than later? Or can some of this work be done in the post-operations review after August, once we sort of have a full picture of all of the issues?
I think if you look through pages 6.8 and 6.9, you can see the list of items that we're doing. Most of them are noted as code deferred. To be honest, I don't know to what extent those items are, or which one of those are currently in progress and which ones aren't. But there's a number of items that that would appear to be sort of non-optional to do. And my concern as chair is if we don't know where the cash flow is, waiting does, it just pushes it out further. It pushes ordering the repairs, it pushes out planning for the projects much further, and it does create some uncertainty on our staff team. I think I just wanted to respond to one of the comments that came out. And I think that obviously as the chair and as our staff, we aren't eager to make this kind of request of you. Our staff's feeling and our staff's intention was to develop earned revenue, to develop new streams of earned revenue. And I'm sure we'll have a discussion around that when the operational review comes. But at the moment, our ability to generate new forms of earned revenue is pretty constrained. We're moving through a pretty tight corridor, and our hope is that the operational review and some of the discussions that emerge from that will open up some new doors. But in the meantime, it's a very tight corridor that we move through.
Okay, I appreciate that. Thank you. And I guess my other question then is to Mr. Chapman, when you were talking earlier about the money coming out of our our capital amount that's set aside for any overages. Do we have a sense, just in general, in terms of what's happening this year? As I recall, we've had a number of tenders, I think, come in under budget. So is it looking like it may be a year where we have a little more latitude on this front?
Mr. Chapman?
Through the chair, I think we're comfortable that this is consistent with the use of that fund, so it's not an inappropriate use for it. You're right, a number of tenders have come in under budget. Most of those tenders are funded through the enterprises, their road reconstruction projects. So this is a tax-supported requirement. Those surplus funds will return back to the utilities.
Okay. Thank you very much.
Councillor Galloway-Seelock?
Yeah, so I think questions are complete, right?
Well, I still have two more people in the queue for question or will comment, I presume, and I presume Councillor Gazzolo will ring in as well. So were you just going to bring forward the deferral?
I just was making sure questions were, I was queuing back in for
Okay.
deferral in my comments.
For deferral and comments. Okay. Does anyone else have questions? Mayor, is there questions?
Yes, and just for clarification, earlier I did make a comment. I'm sorry if it was inappropriate, but it was in the context of presenting the motion. And I did not ask a question at that time. I do have one question. And it relates to the timing of getting these projects done. So, Mr. Johns, you alluded to this, but perhaps you can be a little bit more specific. It's my understanding that a number of these projects would be done during the non-active time within the hall and in the building, and in other words, summertime. And that should the funding not be there and the approval waited until later in the year, we would be well into September, and the hall particularly is more active. So therefore, does that mean that many of these projects, or at least some of them, would simply not be able to be done in 2014?
Yeah, to a large extent, that's true. Center is less active in July and August, and we have the crew there that's able to do and carry out much of this work, and so that is an important piece of the timing of these items.
Thank you.
Okay, and no further questions. Okay, Councillor Galloway-Seelock, do you want to be first to make the comment?
Okay. I will make my comments in my recommendation. My recommendation will be that we give the Center in the Square $100,000 and defer the $250,000 to come back during the operational review. The way I see it in the numbers is that the Center in the Square will have $350,000 to work with from the city as cash flow for their projects, as well as potentially half of their revenue that they would receive through their capital reserve fund from the year, which almost brings them up to $500,000. So it shouldn't defer any of the work that they have to do throughout the summer months. My concern is that at the end of the day, this is just cash flow. They have the money to do the work. They just need a little extra because they're not going to be able to make their reserve fund revenue targets before they need to do the work. So it comes down to cash flow. If there were specific items that they were coming forward to ask for, that would be different. But at the way I read the report and the way my questions were answered, the Center in the Square has the money to do the work. It's just cash flow. So to give them $350,000 to go towards a reserve fund at the end of the day is not something that I'm willing to do without seeing the operational review. There's a bigger picture here, and I think we need to look at it. I'm not suggesting we don't take care of our building. I understand it's a City of Kitchener facility. It does need to be tied to the operational review because it's an overall big picture that we need to see as a council moving forward because it is our building. So with that, I think it's really important that we give them the opportunity to do the work that needs to be done this year. Give them the $100,000 now, and I have no problem giving them the $250,000 in the future if that's what's needed at the Center in the Square to take care of our building. But again, for me, overall big picture, I think it's really important we see all of that before we move forward with giving them $350,000.
Okay, and if I can just make clarification then, so the deferral would be till, and I guess I'll look to staff on this too, or yourself as well, Councillor Galloway-Seelock. When the deferral would be to when council deals with the operational review, or when the operational review is received? When we deal with the operational review, so it would be August, the first meeting in August, Mr. Chapman?
Through the chair, the steering committee needs to work all of this out, but it would appear that August the 25th would be your opportunity to deal with it publicly. The only point I would make is that if you're deferring it and intend to deal with it inside this term, you would need to deal with the request that night, because leaving it until September the 15th or later could put you in a lame duck position, at which point you'd be precluded from authorizing expenditures out of budget.
Appreciate that. Thank you. Councillor Yaneski.
Thank you. I'm not going to support Calgary Zelok's motion on that. I agree with Mayor Zaire in terms of the moving forward on this. We have a building that is almost 35 years of age, and when buildings get to a certain time frame, they do need maintenance, just like any other facility that we have at the city. I think it's important that we move forward with this right now, as is pointed out, that the summer time period is a quieter period, and the staff that is at the Center Square is available and not tied in with any productions that are happening at the time, and can facilitate and make these improvements that are required right now. Deferring it is putting the ball into the future. We're going to have certain matters that we have to deal with that are in the future as well. And if you look at that list that's provided, the attachments of the works that are outlined, the board has its challenges and has had difficulties in the past of addressing them, and have deferred them over a period of time, thinking that, well, we'll put it off to the subsequent year. And that's what's happened for the last few years, as it just gets a little older and the challenges becomes a little harder. And if we don't do anything, if there is a major issue that does unfold, it may just even be more costlier in the end. So I'm prepared that we move forward with the $350,000 at this point in time, and I'm not supporting the motion brought forward for deferral.
Mayor Zaire.
Thank you. I too would not support the deferral, and for this reason. The deferral to the August the 25th, and we've just heard that it would have to be done at that point in time. You will not necessarily see any new information at that time that speaks to this matter. The deferral will undoubtedly cause a number of the projects not being able to be completed in 2014, period. In terms of the cash flow, cash flow is a commingling of operation and capital. And so it does have an effect on the operating cash flow as well. So to make it a partial advance of $100,000 is spoon feeding, and I think is disrespectful of the process. You can take a look at the schedule in terms of the kinds of things that need to be done. And you look into the code, the shaded codes, and you say, my goodness, you cannot hold off on that. This is a serious issue that needs to be dealt with promptly. And I said it before, I will say it once more. Whether we deal with this through this process or later months or later years, we own the issue. This council owns the issue. And as Councillor Yaneski just said, the likelihood is that it will cost us greater amounts to deal with it in the future years than at the present time. I urge you to deal with this one item related to the capital at this point in time in order to give some stability to the centre.
Councillor Etherington.
Yeah, I just wanted to say through you, Mr. Chair, that I support the deferment. I won't repeat what Councillor Galloway Zelok has said, but I agree completely. as I said before, I don't like the fact that this is coming out of nowhere, and I'm very concerned about having more knowledge about what's coming down the pipe before I make any decision like this.
Councillor Gazzola.
I have to start all over again. I forget where I left off. No, I will support. I won't support the deferral because this is an issue that's at hand. If we look at the deferring it till August is too late. If we look at the schedule on 6/8, you can see all of the issues, and they're clearly the big problem there that they're health and safety issues. And I think this is what somehow, if I remember last summer, we got into having to fix a number of health and safety issues there, and without any increase in capital at that time, and these things tend to back up, and that's our problem here. When the chair was first here, I asked, and I wanted to know the cost or the value of that building to give you an idea of when you have a building with those kind of that costs like that type of a building, your capital costs are tremendous. And this building not only housed the center and the square, but also at one point housed the KW Symphony. They currently house the KW Art Gallery, which is an area that they've had to spend considerable amounts of money in the past because the capital requirements there are much more stringent in many cases than they are in the building itself. Air conditioning in the building, you can let people suffer. Artwork, you can't let them suffer. So there's been that history of that. The whole history of this, and I'll go back 35 years. The whole history of this is that we really have shortchanged the center and the square and some of our other facilities that are not directly, totally on the tax rolls. We've shortchanged them over the years and tended to give them a little bit, but get out of our way. We don't want to impact our annual tax levies. And the center have been coming hat in hand every year to try to get the operating expenses to operate the building, and there have been numerous capital technical audits done of what needs to be done on the capital side, and they're presented, they're put there, and we really put forward. The council here is we were putting forward $122,000 a year, and now we're up to $260,000 a year to maintain a building that probably costs between $50 and $100 million a year. So, I mean, this problem goes back a number of years, and that we've shortchanged them. And so, at this point, this capital work, there's safety issues. There are health and safety issues. And deferring the situation will not make them go away. It's our building. Whatever we have to do, we're going to have to eventually do that. It goes beyond a matter of cash flow. So, the operational review, I understand, is coming forward now during the summer, and it really deals more with the operation and the process and the policies that are followed there as opposed to the capital. The capital stands on its own. They have a technical audit list of repairs and maintenances that are required, and these are always catch-up things. These aren't proactive, and we all know that if you're doing them on a proactive basis, that the costs can be somewhat smaller, but the costs are required up front. And we have the tendency to want to keep our tax rates low. And I'm as guilty as anyone. I don't, and looking at keeping our mill rates low, but this is what happens. So I won't support the deferral. I do support the assistance, and we're not giving it to them, we're giving it to us.
Councillor Rabinovich.
Thank you very much. And this obviously is a difficult discussion, a difficult one because we're being surprised by some of the information that's here, and that obviously is concerning, and it's concerning in terms of the overall ongoing operating and capital requirements of the Centre in the Square. It's also a difficult issue because we have to deal with it in the context of all of the fiscal challenges that we're faced with, and the challenges that we have collectively as a council with respect to all of the infrastructure that we own. And I have to say, I find it interesting sometimes how we argue against, or some members of council argue against some investments in infrastructure, and yet seem to find the rationale around others. Having said that, I happen to agree with some of that rationale, and the big part here is that this is an asset that at the end of the day belongs to the taxpayers of the City of Kitchener, and it's incumbent on us to ensure that that asset continues to maintain its value going forward. I understand where Councillor Galloway-Seelock's coming in terms of the idea of deferring this. Part of me is inclined to do that, but in the end I can't support a deferral, and I can't for these reasons. Number one, looking at this issue doesn't solve the whole of our capital problem. There's still a lot more that the Centre in the Square is going to have to grapple with, clearly by the report that's in front of us. And this is helping them address a critical piece of some of the work that needs to be done. And part of the reality of the way the theatre business works is that the key time to do that work is in the summer months, as has been pointed out. And so I think that needs to be taken advantage of as much as possible, because if not, some of that work will likely cost more dollars if it's done at other times of the year. And so I think that needs to be factored in. Thirdly, as Mr. Chapman has said, there is contingency funding available. It's consistent with the intent of that funding and the policy, and so that gives me some comfort in this regard. And finally, and really it's more a reiteration of the point that this really is ensuring that we maintain our asset, an asset that's going to continue to serve the residents of this community, regardless of what the operational audit says. It will continue to serve the residents in one way or another, and so this work will need to be done. So let's move on with it and get it accomplished.
Councillor Glenn Graham.
Thanks very much. And I can't support the deferral, but I certainly appreciate the spirit of where Councillor Galloway-Seelock's coming from. I think there's some frustration at the fact that this is coming to us now, whereas these issues are pressing, health and safety and AODA related. So I do believe that there was an opportunity to share this with us. And just in terms of clarity, I think it would have been helpful, as Councillor Gazzola asked for the gas information in colour. This would have been helpful in colour. I think it would have stood out. So I would just ask that that be a policy where there's something that's colour for us to have that rather than black and white. In terms of the actual approach here, there's no doubt that it's a jewel, that this is, the Centre in the Square is one of our greatest assets. And when we travel abroad, and I was in Edmonton this past week, people were referencing the Centre in the Square as a great asset. And certainly we cannot let this deteriorate. And I wouldn't link it to the operational review at all. There's no doubt that this work needs to be done. So while I disagree with the process, the fact that it's come to us late and that we should have had a better heads up on this, I do support that we need to maintain our assets and we need to support this as a jewel that it is in terms of acoustics and performance. So I will support the original motion and not the deferral. I do think that this is, it's a question of priorities, and we can't have half measures on this. We do have to commit to it fully and in the summer, and timing is critical now. So while I wish it had come to us previously, I will support it at this point.
Before we go back to Councillor Galloway-Seelock for closing, I absolutely will be supporting the deferral. I have concerns when someone lets me know ahead of time there's capital issues, there's funding issues in 2014, 2015, our city can plan for it. When somebody approaches at any time saying, we need the money and we need it now, that is a concern with the operation of the facility. That is why it should be absolutely tied to the operational review of the facility. Representing the citizens of Kitchener, I need to make sure that this is not systemic of larger issues. So while I will support the $100,000 as proposed by Councillor Galloway-Seelock, I think it is prudent that we take everything in context. So with that, no one has asked, oh sorry, Councillor Galloway-Seelock, you want a final word?
Yeah, it's not going to be one word, but it's being suggested, and I don't think most of you heard me. I'm not suggesting, though, the work not be done. If you look at the numbers, which many of you do many, many times, they get $250,000 from us, already done. They get another $100,000. That's $350,000. They get their own revenue from their capital, $125,000. Equals $475,000. They're planning on doing $510,000 work. So they're only short $35,000. They can do the work in the summer. My problem is this money is to go to a reserve fund. Their problem is cash flow. So you give them $100,000, it helps the cash flow. It's suggesting that I'm being disrespectful of the process. Well, I've never said don't do the work, don't take care of our asset. That is not what I'm suggesting. I do not think this is being disrespectful of the process. What's being disrespectful is coming forward halfway through the year with a problem and smacking us in the face with it. Why didn't the board bring the audits to our attention if they've been going on for years? Why didn't the members of council who sit on the board bring this to our attention year after year during capital budget? It's saying that we've shortchanged the Centre and the Square for many years. Yet there's been board members from this council who have known that for years and have done nothing about it. So I'm frustrated. I'm frustrated that we're dealing with a $350,000 problem, which really at the end of the year is going to sit in a reserve fund. We wouldn't do that. We don't usually do that. That's why I'm suggesting $100,000 and a deferral until we can see the bigger picture. There's no doubt in my mind we're eventually going to have to give Centre and the Square more money for their capital project, but let's look at it in the big picture. And if it's a cash flow problem, why are we giving them $350,000? Why are we not just loaning it to them until we can see that big picture? I stick with my original, I ask for your support because I think this is not appropriate to do that at this time, mid-year. And if the deferral fails, I will bring an amendment forward for the main motion that suggests that the $350,000 be a loan, not just be a loan so that they can do the work. But again, my intent is not to stop the work, and I want that to be very clear because many of you made that suggestion as you made your comments, and that is not the intent of this.
Okay, for the benefit of Councillor Singh, I'll recap as quickly as I can. So we are dealing with the Centre in the Square item. The recommendation is moved by Mayor Zaire was for the $350,000 to come from as written, and Councillor Galloway-Seelock has amended the $350,000 number to $100,000, and the rest pending with the operational review that's coming on August 25th. Okay. I did not hear recorded vote's been called. Thank you. So again, we are voting on $100,000 and deferral for the balance. Those in favor? And opposed? That's lost on a tie. So I would look for... Oh, actually, you would... Okay, Councillor Galloway-Seelock?
Yeah, I suggested if that failed that I would bring forward an amendment to the motion that let me just get to the motion, that the Centre in the Square be granted an additional $350,000 to be loaned until the operational review. And the essence of it, the reason for it is it doesn't, at the end of the year, it doesn't have to be tied to the operational review, but that they get the $350,000, but that the intent is that it doesn't just end up in their reserve fund at the end of the year, because they're doing some of the work, and that when they come back with specific capital asks, then I'd probably be willing to give them money versus just giving them $350,000 to sit in a reserve fund at the end of the year.
Okay. My queue is filled. Mayor Zare.
I will be very brief. There are specific things. We have to look at the schedules attached. And there are specific things that are listed under the code. And I believe that if we were to do this, we are evading our responsibility as the owner of the property. We are sticking our heads in the sand and not dealing with the matter at hand.
Councillor Fernandez?
Yeah, just a quick question to staff. What would the implications be of it being a loan? Like, how would that look if that was if that's the recommendation Councillor Galloway-Seelock is making? How do we deal with that as opposed to just granting the money?
Mr. Chapman?
Through the chair, although it wasn't specified, my assumption would be that essentially it would be an advance to the centre. It would not be charged interest, and you would reserve a final decision in terms of whether or not to fully grant those funds or expect some sort of recovery of them once you have the operational review in hand. All I would say is that at this point in time, given the state of the reserves at Centre in the Square, you should be making that loan with full knowledge of the fact that there may be no ability for the centre to repay it, and that you may be obligated to grant those funds at some point in the future in any event.
Okay, thank you.
Councillor Singh?
Yeah, I had the same question as to, for all purposes, we're showing it as a loan, but at the end of the day, if they have no ability to pay back, it's no different than granting. So it's semantics more than anything else. And I wanted to look at Councillor Galloway-Seelock if she wanted to put in some parameters that this would be over a longer period of time. Obviously, there's some issues with the time frame may be not feasible, but we can put some direction as to a long-term outlook for those recoveries of those funds, because I'm not looking to support any advancement.
Councillor Galloway-Seelock.
At the end of the day, I think we're going to have to give the money to the Centre in the Square, but I think it just needs to be vetted through the process. So that's why I'm suggesting a loan, and because I think we need to look at it in the full picture, not only the capital, but the operational review. And so at the end of the day, they're probably going to need a whole lot more money than what is being suggested here. But just to give someone $350,000 to go into a reserve fund, I want to see, there is no information here beyond 2014 of what capital improvements need to be made. I'm being told by board members that they're there. So at the end of the day, I think it should just be a loan this year tied to the operational review, and basically the loan can be as needed. So if they need money to cash flow, then the city can basically cash flow it. And the intent would be, according to the numbers in the report, is they have money to cover off everything they plan on doing this year. So there should be no reason why we wouldn't get the $350,000 back.
Okay. And Councillor Rabinovich.
So just to be clear, Councillor Galloway-Seelock, you're looking essentially at this being a revolving line of credit up to $350,000, and at some point it'll be up to a future this council or a future council to deal with it in the context of the overall review that's going to come back, correct? Okay. Well, if that's the understanding, I will support Councillor Galloway-Seelock's motion. I think it allows us to get the work done that's necessary, but I think it also upholds the principle that this needs to be looked at in the overall context of the centre and the square, its capital needs and its operations. And when that happens, the council at the time can make that decision in terms of do they want to forgive all or part of this loan as they consider those overall financial needs going forward.
Councillor Etherington.
Yeah, I also would support Councillor Galloway-Seelock on this. The only other comment I would make is if I was a member of the public, I'd be wondering what the hell is going on here. But obviously we can't talk about that. I would ask Mr. Chapman, does he know that the centre in the square could not repay the $350,000 if it was a loan?
Mr. Chapman.
Through the chair, I'm relying on comments made by Mr. Shantz earlier today. It may be helpful for him to clarify his comments about cash flow. It's not my understanding from his comments that these funds will simply sit in the reserve for some future purpose, but it is tied to the overall cash requirements for the centre in the square. And on that basis, I made my comments.
Thank you. Mr. Shantz.
Yeah, as was previously noted, our cash reserves have been depleted by the work that's been done and by some of the financial results off of operations over the last couple of years. So the centre in the square is in a tight spot. Cash flow is a problem both on the capital and the operating side, and they are commingled.
Mr. Shantz, just one other question. The results of the operational review that is underway, is that going to improve your financial picture?
The review is a review. It's a review of, and without trying to preempt it, I think what it's intended to cover is to establish the ability of the centre to operate under the status quo environment. In other words, with our resident companies and with some of the community access that many in the community, including this council, want us to provide. It's intended to benchmark our situation and the situation that the centre has with respect to resident companies with other centres in Canada, and to compare whether we're in a better or worse situation than other centres, and whether there's any useful experience from other communities to assist with that. But there's no money coming out of the review. The review will be a hard process of reviewing how do we generate earned revenue, how do we generate other kinds of sources of funding, and how do we work with community groups that want to access the centre to try and make it work.
I appreciate that, but wouldn't the improvement in ticket sales, wouldn't that improve?
Councillor Etherington, we're going down a path that's not related.
Okay.
I appreciate the interest.
Sorry.
If I may, I just wanted to be clear that the last two pages of our request, pages 6.8 and 6.9, do identify that the technical audit has identified $2 million of projects. Not all of those are proposed to be done right away, but there actually is a fairly thorough list of items that have been costed out and put forward, and of which we are planning to do 500,000 this year. So there is, in fact, an identified list of projects that are put forward.
Thank you. And lastly, Councillor Glenn Graham.
Thanks very much. I can't support the motion or the amendment. I think this is like loaning ourselves the money. And when we looked at the boathouse, we said as landlords, we're going to make the capital improvements regardless because we own the building and we care about the venue. And I think this is exact same. We do care about this facility regardless of who operates it. We know it's going to be an ongoing concern, and it's important work that needs to be done. You know, we're kidding ourselves if we think that we can't do the work and that it's just a question of repayment. I appreciate the spirit of it, that there's a frustration that there's lack of disclosure and that we want to see where this is all going operationally, but I don't believe it's linked. I believe that it's about the building, the integrity of the building, just like the boathouse.
Okay, thank you. And I'm last. I won't be supporting the amended motion or the main motion. For reasons I already stated, I have some concern that this needs to be dealt with in a holistic manner, and I have some significant concern that this is what we're looking at is a small drop in what could be a very large bucket. So I'm assuming recorded votes on everything. So we are voting on the recommendation as is, with the stipulation that it essentially be a loan. Those in favor? And opposed? The amendment fails. Now we're back to the main motion again. We'll vote on that. So the main motion is exactly the recommendation as is. Recorded vote. Those in favor? And opposed? Motion carries. Okay, I am at committee's will. We are past our time, and there is one more item that can be deferred. So if anyone has any preference, Councillor Verbanovich?
Well, I think we can deal with it fairly quickly, so
okay.
Let's deal with it. And I'm, in fact, even prepared to make a motion on it.
Oh, very
if
good.
you're ready to take that, or if you want to go to the presentation first. If there is one.
Is there a presentation?
I can be really quick, or you can...
I'm just going to assume everyone's read the report thoroughly, and we're just going to go, if anyone has any questions of staff, we'll go to questions. Councillor Fernandez.
Well, I have questions on the information items, and so I don't want to have those completely dropped off. My understanding is that if we want to move information items into a discussion, we have to have a vote of council.
You can do that, and there's potential for those to be moved to a different meeting as well, but we'll get to that when we get to it.
Okay.
Okay, so questions on the postage. Councillor Singh.
Yes, thank you. And glad to see this report back, as I had highlighted this as a possibility of recovering some of the increased cost to postage during the budget process. And I'm glad to see that there is a carrot and a stick option. I have questions more related to option 2 with the $10 rebate. Now, this is going with the basis that we would encourage e-post. E-post.
That's correct.
Usage versus just bills being available online or being emailed directly to the user's email account, correct?
That's correct. We would encourage e-post.
Right, and because I know initially the Municipal Act restricted any other method other than Canada Post, but since then that's amended. Why are we still consistent on going with that direction? Because there are costs related to e-post as well.
For property tax bills only. So Municipal Act restricted us from sending tax bills.
No, the report said it's been amended since.
Right, so previously it was restricted only for property tax bills. Utility bills you can't send with any other e-billing method.
So the way the report lays it out, so tax bills still have to be used with e-post, but utility bills can be sent through any other method, correct?
We can do both. No, we can, yeah. So,
okay, sorry, I want to clarify, because it says in the report that the Municipal Act has since revised the policy, and there's no longer the requirement that property tax bills have to be delivered with Canada Post.
That's for option number 1. For option 2, there's no restriction.
It's on page 7-7. Appendix A, halfway down, why the city went with e-post?
Yes.
Yes. So we do not have to be with e-post for anything, was my understanding, and I think that's Councillor Singh's question as well.
Yes, thank you, Councillor David.
Property tax bills are sent through e-post. What you're suggesting is when a new system comes on board.
I understand that, okay. And some carrying on with what Councillor Davies said as well. It doesn't restrict us.
No.
We don't have to use e-post.
That's correct.
Okay, that's the clarity I was looking
Okay.
at. And there's a cost related to e-post as well. Apart from regular billing, it's still a limited cost, but still cost.
That's
nonetheless. Okay. So if we were to go with option 2, but not go with e-post, but use the method of if a user wants their bill sent to their regular email account, would that diminish some of the cost that's outlined? So cost recovery would be a lot faster then. Have we costed that out, or we never explored that option?
We're not set up to do it that way. So we don't have our billing system is not set up to be able to send emails right now.
Okay, but we are revamping the system.
So we are going to SAP,
yes.
And so it'll take 2 years to implement SAP, the new system, and that's when we will look at sending emails.
Okay, until then, we just don't have any method to
That's
do
correct.
So. Okay, all right. Okay, that answers that question fairly well. As for the $10 rebate, was there an option considered, kind of a combination of both, 1 and 2? Whereas if a customer chooses, they can either get money back, or if they don't, they want paper billing, that they will incur a cost related to it. So if they choose to accept e-billing, they get money back. If they choose to continue insisting on paper billing, they have to pay for it.
So I'll make 2 key points with option 1 and 2, and a combination of the 2 options. The first is October 2013, the Governor General actually made a commitment in the throne speech to basically end the pay-to-pay policy, so customers would not have to pay for receiving a paper bill.
Mm-hmm.
The second point is we have e-post and the e-mailing option through Canada Post since 2002. We've have 10,000 customers enrolled in e-post right now currently. We would need at least another 36,000 customers to enroll to just offset the options.
Right, and the report states it, and just because I'm cognizant of the time that it's allowed to me, so I don't want to carry too much on what's already in the report. There's a cost related to, obviously, if there's incentivized to the customer to accept e-post billing. Don't the costs offset themselves? Because obviously the cost to send a paper billing is far more than the cost that we would have still incur with e-post.
E-post is 35 cents for each transmission, right. And post is 69 cents, sorry.
That's with the increased postage?
With the increased, yes.
With the increased postage, okay. And I guess if we were to drop it to $5, it would just drop the overall cost that we're anticipating. That's shown in the chart, ultimately in the last page. I think here on 7-6, it outlines that option 2, the cost of the city is $160,000 to go with this direction. If we were to drop it to $5 as an incentive, that would just drop to $80,000?
Yes.
Okay. All right. Well, I have something else I want to ask again, but I'll come back later.
Okay, thank you. Councillor Gazzola?
Yeah, one of the things I wanted to understand, I think you've answered it, that when you get your new system, you can get into e-bills just like American Express or anybody else.
Yeah, even like Rogers, President Charles.
Yes. And the other thing I was interested in, actually, I'll leave it at that because basically, it's the status quo right now.
It's the status quo. That's right.
We're going to try to get more, and we're really going to deal with it when you come back with the 2015 budget.
That's correct.
Okay. I'd like, though, when you do come back with that, just a little more information. I wasn't aware of what it's costing us to use e-post. I'd like to know that. I'd like to know exactly what does it cost us now to the process we're going through now. You know, what are our human resources costs? What are our supplies? What are our equipment costs? If you can sort of put a figure on that so that we can see where we're going, okay? So just a little more information. So when we deal with the 2015 budget, we'll make a decision at that point what direction we want to move.
Okay.
Yeah. Thank you.
we can just carry on. The recommendation is there, but
is it on? Oh.
We're not giving any incentives for people to go to E-Post. We're just going to try to verbally encourage.
That's correct.
Yeah, okay.
Councillor Fernandez.
Thanks. I see where we're going with the rationale. I mean, certainly we don't want to penalize seniors, but have we thought about doing a combination of 3 and 4? I mean, we used to do bi-monthly billing with our utilities. There was, and I understand the rationale that's discussed in the report, that we found that when we did the actuals, many customers were complaining. Can you give me a sense of how many customer complaints we were receiving from the month that they were assessed to the month that it was given sort of sorry, I just can't find the word. There was a real cost to the bill every other month, and then they were kind of assessed every other month.
Based on estimates.
Yeah, based on estimates. Thank you. That was the word I'm looking for. Do we have a sense of how many customer complaints we were getting?
I don't know that what the number was, but I can tell you with the winter we had and our readers not having access to the meters, we had a number of complaints from customers saying why are we estimating their bills, and it was all because we couldn't access their meters just over the last couple of months from January, February. So I can tell you the numbers were high, and I think you would see the same thing in this scenario. If you go,
you said you have an understanding of what those numbers were?
I don't know the exact numbers, but I know that it was high.
It was substantial.
Yeah.
Okay. I mean, I'm just thinking that at least it would be combined. If we combine the two of them, then it would reduce our costs significantly, because we're sending out a bi-monthly bill, actual bill. We wouldn't be sending out an estimate. Is that?
Yeah, and I won't repeat all the cons that
I understand.
the disadvantage of this option, but this is something that our staff is not recommending. Just listing all the disadvantages of this option, number 4 specifically.
Mm-hmm. Okay, thanks.
Mayor Zer?
Yes, very briefly, I will support the recommendation. I use ePost, and it serves me well. However, and I think it is a way of getting people into it and not penalizing. The however is this. Yesterday when I was trying to download my, off of ePost, the tax bill, and I don't know if it just happens to be a quirk in my own system or whether there is something in the ePost getting it over. I was only able to print one of the 3 pages related to the tax bill. And so I'm wondering, we could talk offline, but I'd be concerned if that was a system issue with the ePost as it is integrated with our system.
Okay. So I'm not aware of that specific issue, but I can tell you the customers really want to go to our Kitchener Utilities site and go to our Kitchener Utilities site and actually look at the bill there rather than getting it through ePost.
Right. But I am talking about the tax bill, which then leads to the follow-up question on that. Can an individual go directly to the city in some way, shape, or form and get that tax bill copy? Because I know on the utility, I do go to the utility to get the bill, but on the tax bill, can they go directly to the city to get that tax bill?
And that's what we will be considering when the new billing system has been implemented.
But cannot at this time?
At this time, we cannot do it with our existing billing system.
Okay, I think we should double check what is happening in the system.
Yes.
Councillor Yaneski?
Yeah, thank you. I really do like option 4, and I think that's probably the better, but you don't have any dollar figures as to what the impact would be. However, my question to you is that noting in the chart on the left on page 7-2, that City of Waterloo and Cambridge are actually on bi-monthly right now, and so is Hydro, although they're reconsidering. What's their position in terms of are they happy with it? Things are flowing normally, and everybody's accepting this. Or do you have any comments on those 3?
With City of Waterloo and City of Cambridge, they only bill for water and sewer. They don't bill for gas. So our customer bills for customers are much higher than just billing for water. And I think that's the big difference here. So customers will get a significantly high bill every 2 months rather than monthly.
I mean, it's just taking two bills and putting them into one, basically. For 2 months into one, one billing.
Mr. Chapman, Dad?
Through the chair, I think Mr. Saleh has made the point that it's customary for gas utilities to bill monthly. Part of the reason is it's not uncommon in the wintertime for a meter reader to be unable to read a snowed-in gas meter. So if we're billing monthly, that means that potentially you could go 4 months for a ratepayer without having an actual read of their meter. And if we've gone 4 to 6 months in the winter season, take this winter as an example, they could be having their bill set based on estimates over that time frame, only to find in the springtime a whopping huge bill based on those estimates. And although we don't have the statistics in front of us, I've confirmed with Ms. Houston that when the decision was made to go from bi-monthly to monthly, it was because the volume of complaints were so high based on those high gas bills after the winter heating season.
Okay, I have no other questions.
Councillor Rabinovich?
Thanks. I will. Am I the last person?
Well, I have a couple of questions, but
okay.
Sir, you're first.
Yeah, I was going to move the motion. I said.
Sure. I'll just ask very quickly. The one item I'd like to see looked at that wasn't in this was the potential for grandfathering. So if someone's getting a paper bill now, at the point that they either switch over to an electronic bill or move or new residents to the community, they don't have that option any longer. They have to move exclusively to the electronic billing system. Is that something that could be looked at?
Can you repeat your question again?
Sure. Basically grandfathering. So once somebody is off of a paper bill, they're no longer permitted to go back or have the option, but it'd be $2. So once they are no longer, once they choose to go to the e-billing system, if they decide later on they want to go back, or if it's a new resident, then that bill is automatically on there. So it's not something new.
Sure, we can consider it.
Okay. And my other question was with respect to ePost, and I was glad to see that we're no longer bound by Canada Post. Do we have an idea of what the cost will be? Because we are paying 35 cents per email now, essentially. Do we have an idea what that number will come down to, or even an estimate when we have a new system in place?
I don't have the number right now.
Okay, because presumably
until we get into the new system implementation, we won't know.
Okay, presumably it would come down considerably. Those are my questions. Thank you. We'll go to Councillor Rabinovich.
Thank you. I will move the recommend.
Oh, so did you have further questions? Okay, pardon me. Okay. Councillor Singh.
Oh, hang on.
Sorry, Councillor Rabinovich, I'll be brief. So again, coming back to option 2, I'm still kind of stuck on that and can't wrap my brain around why if we are giving an incentive, people were to switch over, and obviously the cost we still have to incur if you're sending them a paper bill. So the $160,000 cost that's outlined for option 2, what part of that is in the report said there will be additional staff resources required to change over to the system. So of that $160,000, what is that component?
That's not in here right now. We said there'll be a promotional budget of $60,000. So that's part of the 160, and the remaining is the net cost of switching to ePost.
So why would that be? So it's just taking. So simply, how many bills do we send up for the tax bill? Do we send quarterly, or what do we do?
So this is a combination of utilities and tax bills?
Utility and tax bills.
Okay.
Well, I know we don't send monthly tax bills, right? So, okay, if you just compare, as an example, just a utility, it's a monthly bill that
right.
gets sent out. So we're looking at 65 cents a postage right now currently.
69 cents.
69 cents? Okay, times 0.69. So it's costing the utility right now $8.28 per customer to send out the bill. So if you were to have that incentive of $5 if you were to switch over, there would be a $3.28 savings.
So there'll be a 25-cent charge for ePost, right? ePost transmission, and a 69-cent charge for postage. So the net savings would be $25,000 approximately for 10%. If you assume a 10% increase in enrollment for ePost. So the big assumption here is that there'll be a 10% increase in enrollment for ePost.
Right. Okay, so whichever direction this goes at, I would hope to get it. Obviously this needs to be ratified in council. I'm not sure which direction I'm going to be picking as support, but I would hope to get additional information as to what would be the cost cost-neutral option as an incentive. Right now, $10 is just an arbitrary number thrown out there. It comes at a higher cost than actually what the recovery cost is. What would it be, $1, $2, 30 cents, 10 cents? Do we know that, or would that have to be looked at?
You're talking about the promotional cost?
That's correct.
Okay. So this is a difficult question to answer. Canada Post actually spent $5 million over the last year on promoting e-post.
If we're not promoting, we're just giving the options out there, and it's just what it costs.
Right.
If we were to give an incentive, where would it be net positive compared to if there's an incentive on the table, rather than paper billing?
With $10, this is an assumption. I'm giving the numbers. $10, you'll need at least 36,000 customers to enroll for it to be break even at that point.
Right. So obviously the lower the incentive, the lesser customers you really need.
So the more incentive, you hope customers would sign up. But
okay, all right. I'll wait for my comment then.
Sure. And Councillor Urbanovich, thank you for your patience.
Sure, no problem. I'll move the motion that's before us. Unfortunately, I think we as municipalities, in fact, businesses and governments who rely on Canada Post got an early Christmas gift last year with a much higher bill that we were going to have to incur starting midway in 2014, which essentially amounts to being a tax on small business and a tax on other orders of government through this federal government agency. And unfortunately, I think what goes along with it is decreased service in terms of delivery to our homes and everything else. But that's another story and debate for another day, as we are going to have to deal with these community mailboxes being implemented in our communities. Anyway, I think the motion before us recognizes that this is the most effective way for us to go forward for the immediate term. But developing an email system as part of SAP should, quite frankly, get it down to a matter of cents once that initial programming cost is developed in terms of getting them sent out each month, because it should, quite frankly, just be automatic. So I'm looking forward to what the next couple of years will bring about from a technology point of view. And in the meantime, this will hopefully see us have some additional people getting onto e-post and helping us out in this regard.
Thank you. Councillor Singh.
Yes, I will support the option that's being put on the table as a motion. Personally, I'm still not sold that this is the only direction to go. I think enough time hasn't really been spent to really utilize an opportunity where we are giving the appropriate incentive, which is still cost neutral to us in the long run, which it would be cost recovery rather than upfront cost that's being outlined in option 2. Obviously, the $10 incentive is just one of the options. That may not be the formula that works. I think it's not the right setting for us to be tinkering with that formula to be, at this point. But I would hope, and I will continue to engage with staff to look at other options that we can come back to this and offer an opportunity to our taxpayers and our customers of our utilities to look at options that they can receive benefit at the same time, do the right thing, and provide an opportunity for the city to lessen our costs, but ultimately our customers and our taxpayers win at the end of the day. So I think work still needs to carry on this. I don't think this is the end of the day. Obviously, with our systems changing this app, in a couple of years we'll have far more opportunities to look at various other options, but I would hope to see that we can even be more preemptive and try to do something more even sooner than that. But for the time being, I think the option that's on the table is probably the most prudent.
Councillor Gazzola?
Yeah, as I stated before, I support the option on the table, which really is just to keep moving forward. The big thing of the option on the table is that we're going to get a chance to look at this again 2 or 3 months down the road, at which point staff will have a better feeling for what it has cost for this year, what it might cost for next year, and what we can get out of our, I think it's really important what we get out of our new SAP system. That'll have a big bearing on that. they don't have that information now, and hopefully they'll have the majority of that down the road. So for the time being, I can support what's before us.
Councillor Fernandez?
I see this as an alternative, but I'm very concerned about the percentage of residents who are very leery of anything coming on a computer or don't have a computer. And I just hope that we're able to, we will continue doing mailed bills out to them, but I want to find a way to reassure them that they will continue receiving those paper bills without being penalized, because we have to understand that there are many seniors out there or people who are on fixed incomes and don't have the availability of a computer at their home, that this is the only way for them to feel comfortable receiving their bills. So I hope we're going to recognize that as well in this process.
Councillor Glenn Graham?
Thank you very much. Councillor Fernandez is right. We always have to have a multi-channel approach, so we do have a paper option, but I would see it more as an incentive eventually moving towards e-services and being able to present this as an environmentally friendly option for people to be able to view their bills online and not necessarily even print them, although Mayor Zaire makes a good point about that option being possible. So I will support the option on the table. I do think that that's the direction we should be moving in eventually. And I also look forward to seeing what our SIP system can do for us.
Thank you. I'll support the recommendation as well. It's not worthy of amendment, but I hope staff does take a look at the concept of grandfathering, because I think it would speak to the concerns that I share, that Councillor Fernandez mentioned about especially seniors and those that don't have access to computers, as long as they stay in the residence that they're in, that they not be charged any fee or anything like that. But once somebody moves, or if there's new residents to the community, that's when we can start looking at possibly implementing the stick model, because the reality is it's not environmentally friendly, and it's costly, and to be frank, what costs us in the end costs the taxpayers as well. So, and the one last portion of that as well is staff could also look at, now that we have Wi-Fi at all of our community centers and numerous other city facilities, how we can foster that environment for people that want to go in and view their bills at a city facility, as opposed to having to come to City Hall or some other place if they don't have internet access. So I don't think a recorded vote's been called, so those in favor? And that's carried unanimously. We will now move information items. Councillor Fernandez wanted to have some questions. Could I get a show of hands of people that are going to have questions on the information items? Just Councillor Fernandez. Okay, we'll deal with it now then. And which item?
On the development charges.
The development charges reserve fund? Yeah. Okay. We need to formally take a motion. So you're moving that would be moved out. Discussion. Okay, so we need to vote on that. Those in favor? Okay, that carries. And Councillor Fernandez.
Thank you. I guess a couple of questions that I have regarding the credit for service agreements on page 3. Can I have a little bit better understanding of the 2.5 million outstanding? Is this? I'll tell you what I understand, and then you can tell me if I'm wrong. This means that there are outstanding credit for refund agreements that we still have, that are still need to come online with our budget, and that we, I know the words I'm looking for, but maybe you can fill in my gaps, Mr. Chapman. I think you know where my concerns lie with those, that we have to start paying operational costs for those agreements earlier than we had expected. Is that correct?
Through the chair, the details are in Table G, which is on page 13. You are correct that these represent agreements that have been entered into by the city to allow developers to construct works earlier than we had planned to construct them. About half that value is an old agreement related to Lower Hidden Valley, the Peter Cruz subdivision, and that developer will be entitled to a refund at some point in the future. The other ones are newer. You can see the two at the right-hand side there are two that were entered into by council in 2013, one for Activa and the other for Monarch. And those agreements, if I'm not mistaken, did have additional provisions in them, which shifted some of those maintenance costs to the developer in the near term.
Okay, so I was kind of in the ballpark with that. The bylaw that we passed, the reference to the new DC bylaw that came into effect, we're talking about 2009. So did we not just pass our DC bylaw last week for the next 5 years? Because there's no reference about that in the report.
That's correct. This statement is as of the end of fiscal 2013, so all references in this report will be for the year ending December 31st, 2013.
Okay. I think that was all the questions I had. Yes, any other ones I have I can ask offline if I need to. Thank you.